Good morning. Mic check, mic check. All right, hopefully the audio is back up. Okay, so top 10 on the NASDAQ. NBIS again. Chips. Chips are higher. Okay. Most of the strength due to crude collapsing on geopolitical pause, on a geopolitical pause over the weekend. And the strongest rebounds are coming from semiconductors and tech this morning. Okay, NBIS, CoreWeave, Workday, Shopify, Baker Hughes, Rocket Labs, number 5, number 4 now, moving up the list. SNDK, Cadence Design, MSTR, Marvell, Synopsys, Intuit, blah, 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 and so on. Google, Palantir, AMD, everything is up right now. On the S&P 500, that was the Nasdaq. On the S&P 500, we've got airlines up a bit. United Airlines, Southwest. We got cruise lines up. Carnival, Norwegian, Royal Caribbean. Royal Caribbean's at slot number 12 or 13. Delta Airlines, Supermicro with a bounce. Oracle with a bounce. Oracle's up 2.6%. Pre-market. SNDK 2.8. Where is Micron? Micron, let me see what Micron looks like. All right, here's JP Morgan. JP Morgan following through this morning. Okay, here's JP Morgan. Bullish on JP. And the banks. Some of the stocks that are on the watch list may not perform as well, only because the markets have rebounded. So I'm sure you'll be fine with that. If stocks that you already have on. How's the audio, folks? All right. Let's see. History. Mic check, mic check. Nobody's in the room at the moment. Okay. They'll be coming in soon enough. All right, what do we got? We got about 8 minutes to go, a little bit less than 8 minutes. Let's get ready for the opening bell. Okay, so we got Dallas Fed manufacturing at 10:30, 2-year note at 11:30, 1 o'clock a 5-year note auction. Okay, 2:10. Okay, Trump will be speaking after 2 o'clock. Okay. So banks are up, semiconductors are up. Okay, I wouldn't jump up and down too much. Right now, what we'll be dealing with is a move back to the 50-day. S&P didn't get hit as hard as the Qs and tech, so this will bounce. 50 days up overhead. We got moving averages overhead, so we'll have some resistance. If you manage to squeeze out some profits on some of the stocks that you carried over the weekend, I would suggest, I don't like to make suggestions because I don't know your individual circumstances, but if you may have a profit and you've been sitting on a losing position, maybe the market's pulled back on you, maybe you're in semiconductors and you don't have enough time. If you're trading options in particular, if you're trading options, if you're trading shares, that's a different story. You can sell covered calls, etc. Okay, I think I know what the deal was. I have a input or output, I should say, output. I have an output toggle that has a mute button down at the bottom for whatever reason. I don't know why it does that, because I certainly didn't select it, but okay. Perfect is better than bad. Okay. Really? Hey, Goose, you're a bad girl. You're a bad girl. You caught that birdie, huh? You hurt the birdie's feelings? Cat caught a bird. Feathers everywhere in the living room. Glad I caught it before my wife found it. She would have like lost her mind. Okay, futures. We're still up, what, 60 handles or so? Mic check, mic check. Yeah, Steven, I just clicked on the link I sent to you. Popped right up. Okay, I got 2 minutes to go. Let me just take 30 seconds here and feed this cat. I'll be right back. All right. Futures, giving it back. All right, we're already fading. And we're open. We are open. Let's see, Apple. Okay. Give it a few minutes for markets to settle down.
High took alert plus 800.
Okay, that's all right, now we're current. Okay, JP Morgan. Gapping up. Banks on the move. Banks on the move. Okay, let's see how many stocks are advancing. We got 353 stocks. That's the way we left off on Friday, by the way. We had about 330 stocks advancing into the close on Friday. Of course, Friday we were up. A lot of the banks were up. JP Morgan, Morgan Stanley bouncing. Bank of America, Citigroup. Citigroup back to the 50-day. Looking forward to get back above it. Apple up this morning. Apple new highs, new all-time highs. Apple. Apple. Mhm. Okay, Apple. Apple all-time highs, new all-time high. JP Morgan above pre-market high.
Hi, took alert plus 800.
Banks are up. Okay, Oracle inside day. Nothing to celebrate yet. Micron took it off flat. Took it off flat on Friday. Continues to show weakness at the moment. SK Hynix back to 156. JP Morgan on the move. Okay, let me just take a snapshot of this. I was talking to my son this weekend. Said, Antoine, I think I'm turning into a grumpy old man. He didn't even hesitate. Little bitch. Yeah, Bobby, you're angry a lot. So I have to change that. I have to change that. My next door neighbor is a good model. Guy's in such a great mood all the time. I used to be in a great mood all the time. I don't know what changed. I guess it's I've been paying too much attention to these stupid X posts and stuff. It gets you angry. So I have to stop looking at that. All right, so I posted the top 10, top 20 stocks on the NASDAQ on the left and the S&P on the right. Okay, futures continue to drop. Futures still fading. Okay, futures, S&P is at the high, gapping up. Apple hanging in there. Okay, let's see. Baker Hughes, opening pre-market high right there. We're above the pre-market high for now. Let's see, DoorDash. I'm just going to go through the top 10 on the NASDAQ. DoorDash, well above its pre-market high. DoorDash. Okay, DoorDash on the move, gapping up. DoorDash, gap and go. Very mumble-like. That's weird. Yeah, my audio is normal. I don't know what the deal is, guys. I really don't. I have a monitor in another room that's running on the. Actually, it's on the TV downstairs. I hear it. Mhm. I don't know what the problem is. I don't know what the issue is. Mic check, mic check. Okay, there goes Intel. Intel bouncing. Intel with the bounce. Mic check, mic check.
High took alert plus 800.
Yeah, the 10-year looks good. 10-year. DoorDash on the move. JP Morgan pushing higher. It's above the pre-market high. It's so weird. Stevens on the East Coast. Stevens on the East Coast. I don't know. I don't know what to tell you. Everything is fine. All systems check out. I just restarted the stream. Yeah, I got people in Europe that can. Okay. Yeah, I got people in Europe. Okay. Let's see. App loving. Okay. Let me just check a few things here and see how. SoFi's up quite a bit. SoFi, Rocket Labs pushing higher. Rocket Labs RKLB. Pre-market high got rejected. SoFi pre-market high, taken off to the upside. SoFi above the pre-market high. Okay, Nvidia diving. Nvidia dove off the screen there. Google on the move. Google, I have a position already. Been looking for that to jump back. Google jump back above the 200 day, back above the 200 day. That's good. Above the pre-market high. Mhm. All right, Google looking really good. Google looks like it's going to be a good day. Google on the move. Rocket Labs. Shopify. Oh, that was active last week. Shopify. Shopify. Big bounce. Return. Shopify. Above pre-market high. Gap and back above the 50 day. Looks like. Yep. Above 50 day. Shopify. Okay, futures trying to stabilize here. S&P 500 coming into 946 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're at the 50-day again, trying to stay above it. Drifted right below it. That was my concern, that we might hit the 50-day and get rejected. So apparently they blew up a big, one of those underground tunnel storage places. It's like a nuclear weapon went off. All the munitions underground blew up. That's crazy. Okay, I'll ask StreamYard. Let's see. Um, Okay, I'm submitting a technical request to see if they can figure out. Okay, JP Morgan fading a little bit. All right, so I submitted the help request and see if there's something they can do. Yeah, I have two mics, Captain. I have two mics, a boom mic and a headset. JP Morgan fading a bit back under the pre-market highs. We gapped up quite a bit this morning. Okay, Microsoft continues to move higher. Microsoft above the pre-market high. And we're looking for this to continue. We've got the 50-day overhead. All right. All right. All right, Microsoft continues. All right, Microsoft continues. Let's see. Let me see. Let me pull it. Let me pull this stream up on YouTube. I mean, if it's on YouTube and the audio's fine, guys, that means everyone that's got YouTube is going to be able to listen to this. Let me see. Let's see. See if my stream is on the top list here. Okay. Live. Okay. Live. Search. I guess I should have set this up already. Or a favorite that we can just jump to it. Invest within. Okay, just watching Microsoft out of the corner of my eye. Okay. Okay, there we go. Let's see. Mic check, mic check, mic check, mic check. Mic check. Yeah, the audio's fine. I'm listening to it on YouTube, actual TV. Yeah, the audio's fine. I'm listening to it on YouTube, actual TV. All right, you'll hear me talking to myself. I don't know if this is going to give me feedback or whatever, but you'll hear me talking to myself on the TV. All right, you'll hear me talking to myself. I don't know if this is going to give me feedback or whatever, but you'll hear me talking to myself on the All right, TV. So it's good on YouTube. I don't know what it is, guys. It has to have something to do with maybe a split screen on stream. Well, it can't really, because if it's on YouTube, I don't know what it is, guys. It has to have something to do with maybe a split screen. Because I'm literally listening to myself repeat myself. Because if it's on YouTube. All right, so it's not on this side. It's not on this side. Okay, Microsoft. All right, so here we go. Microsoft starting to make a move. Open and range breakout. Microsoft. Okay, we got Microsoft open and range breakout above the pre-market high. Yeah, I wear a headset and also have a boom mic right in front of my face. The headset is so I can hear the stream as it goes out live as a monitor. Okay, we're pulling back in now, Microsoft. Okay, Apple, pre-market high, but we're just kind of sitting here right now. Okay, the number one stock on the NASDAQ and S&P 500, Baker Hughes. No opening range breakout. JP Morgan, the banks above the pre-market high. JP Morgan over there on the right, gapping up. Yeah, I think the Friday thing was coincidence, guys. I really do. Because if I can hear it on YouTube, that's a separate feed from what I'm listening to or what I'm producing. So if I'm producing audio and it's lacking, you wouldn't hear it on YouTube. I did send in a support request to see if there's something, maybe, like Captain said, maybe there's servers out there, different locations. That is so weird. I don't know. That's the most odd thing. I don't know. JP Morgan pulling back a bit. All right, what's the S&P? S&P faded. Okay, let's take a look. Let me see if StreamYard responded. Spot Gamma, StreamYard, reply. Let's see. We're currently seeing a known issue where participants' audio can cut out or they can't hear the stream when using Safari from version 26.1. Refreshing only helps temporarily. Workaround affected guests should switch to an alternative browser. Mm-hmm. Yeah, they checked the stream. StreamYard checked. They have the audio. They can hear me. Okay, so we continue to fade after a very nice gap up. SoFi up quite a bit. JP Morgan. S&P 500 fading the gap. Yeah, I have like three people, four people maybe. We have over 600 members, and I see how many people? Three to four. Three to four having problems. That's really odd. But, Apple continuation. Apple trying to get above the pre-mark, trying to get above the opening range high. We're trading at all-time highs right now. Apple. Let me see what I have here. YouTube. Let me just check YouTube again. Okay, I'm checking YouTube again. Apple, Apple, Apple. Mic check, mic check. Okay, yeah, so YouTube, if you just go to YouTube on your TV, the audio's there. Okay, there goes Apple breaking out. Apple breaking out. Apple breaking out. Okay, you can hear me. I'm repeating myself in the background. All right. Okay, Apple still going here. All right, looks good, Apple. Oracle. Okay, you're looking at that. It's bouncing, but it's still in a downtrend. Oracle. All right, let's see. Okay, let's look at the 60-minute. Okay, you can see clearly in a downtrend. Oracle. Obviously 121.99. You see ORCU is here. You're looking at ORCU. Okay, it's above. Looks like 560, 560. And 627. That's all I see. Nice volume. Oracle. Let's see, I have ORCX. ORCX. Okay. All right. Baker Hughes, Workday, Tyson Foods, gapping up, Carvana, Oracle, DoorDash, Autodesk. Dollar General, CRM, DoorDash, Oracle. Okay, maybe we got something going on Oracle. Dow Jones CRM, 3M breaking out to new highs, 3M breaking out. Apple's still going. Let me see what I got on Apple here. I think I sold all my, yeah, I did sell all my Apple last week. All right, what's CBRS doing? CBRS, that's down again today. Home Depot up Gapping up, Home Depot. Palantir, nice follow through on Palantir. Big range on Palantir. AMD, big move down on AMD. So some chips are up. They sold the news on AMD. Intel's also moving lower. Intel's making new lows. McDonald's, what's McDonald's doing? McDonald's has been at the lows lately. Okay. The 50-day is starting to flatten out at the low. So maybe this is a base building and we'll see a follow through at some point. S&P still driving lower, back below the 50-day. Okay, RSP. So gapped up, almost made a new all-time high. We tested 215.95, so we know where the culprits are. The culprits are the tech and semis, the New York FANG components. Okay, New York FANG is down, fading from the high. So New York FANG has to perform, as we mentioned in the weekend video. The technical issues that I had over the weekend had nothing to do with the mic or anything. Obviously, you could hear the video. Had more to do with I upgraded this weekend. I upgraded one of my machines to the newest OS, Tahoe 26.2. All right. Intel still fading. All right, so a nice mix of stocks that are advancing. 333 stocks advancing, so that's telling us that breadth is still improving. Breadth is still improving. S&P 500 moving higher. Mid caps, small caps, Nasdaq. So if you're having issues with a particular stock, maybe switch sectors or take a look at the watch list. We'll take a look at the watch list now and see how it's doing because a lot of these stocks looked like they were going to follow through. Okay, let me just put this back on. Okay, I'm going to try on my, whoops.
Time for some of today's trending tickers. Got a lot on the list today. Cracker Barrel, AstraZeneca, D-Wave, Quantum, and Rocket Lab. First up, let's talk about Cracker Barrel.
Okay, I'm going to try on my cell phone. The audio on my cell phone. Okay, let's see. Mic check, mic check, mic check. All right, cell phones here. Support had mentioned browsers might be having issues. Different browsers might update your browser. I don't know. Let's see. Okay, trying on my cell phone. Okay, trying on my cell phone. Mic check, mic check, mic check. Mic check, mic check, mic check. All right, so that's about a 5-second delay. Obviously. All right, so that's obviously. Well, I don't say obviously. I don't know the technology, but um, it's playing on my cell phone on the YouTube link. It's playing on the TV on YouTube. So um, tech support said it could be browser related on YouTube. The fact that my TV doesn't use a browser, it's using a native TV, makes me think it has something to do with the browser. that you guys might be using? Because YouTube would not have audio if it was an issue coming from the source. Okay, so communication services is doing well. That means that we need to pay attention to Meta, Google. Those are two that have pulled back right now. Netflix, all of those communication services, consumer discretionary is up. Okay, this looks good. Apple, continuation. Okay, so Apple has earnings. Apple makes privacy central to smart glasses push. Why don't you say that a little bit harder to understand? It's making privacy a central part of smart glasses strategy. Okay. Camera equipped AI wearables. Okay, whatever. All right, so privacy an issue. All right, Apple continues. We got earnings. Okay, Apple, we got earnings after the close on Thursday. Okay, SNDK. SNDK. That is quite a move on SNDK. Chips are getting sold. Okay, futures continue to drop. Okay, we're coming up to support. $7,400, then $7,380. Okay, what's VIX doing? VIX. VIX, I have calls on the VIX. VIX. Okay, that's pushing back up. VIX is up quite a bit. Okay, I have the 2025 call spread, so we'll start making money. We're already making money on those hedges. Um, okay, JP Morgan. JP Morgan gapping up. A little fade for now, JP Morgan. Home Depot. Okay, let's look at the watch list. Looking at the watch list, stocks that are defensive, didn't think that they were going to do well compared to the open, but a lot of these are up. Apple's up on the watch list. Apple looks good. Bank of America trending. Ball Corp breaking out from the watch list. Ball Corp. All right, day two on the breakout. Ball Corp. All right, so people with different browsers, um, Ball Corp, Best Buy, back to highs. Best Buy's back to highs. Cerebras falling. Centos breaking out. Watch list breaking out. Okay, Centos is rising. This is bullish for the economy. Okay. John Deere. Dell pulling back in. All right, tech-related stocks are pulling back. Emerson Electric. I believe that has earnings this week. IBM. Fade and bounce. Looks like it's going to base. Johnson & Johnson. Strong. Johnson & Johnson. JP Morgan. Back gapping up. Eli Lilly. Okay. LQDA. MDT. Healthcare related names. PKG. Okay. Schmuckers. SPY Value. AT&T. AT&T is up, and B&Q Real Estate, VeriSign, VRSN. Verizon. Verizon's going. It's up plus 2%. I tried a different input, trying a different input with the mic and see what that looks like. Mic check, mic check, mic check.
SNDQ, NBIZ, MUZ, SOXS, BEZ,
Mic check, mic check, mic check.
SKDD, MUD, NIPG vaulted down. TABI vaulted D, NBIZ, SOXS, RKLZ, SSPC, UBIX, UBXY.
Any difference, guys? If not, I'm going to pull it back the way it was.
I may resume in less than a minute. IREZ, NBD,
All right, it might be the mixer.
SSPC,
Is it better now? Okay. All right, it might be the mixer. It's better. Okay, cool. Well, I'm going directly from the mic
NBIZ,
into the computer, not going bypassing the mixer. It's better. Okay, cool. Well, I'm going directly from the mic into the computer, not going bypassing the. All right, so it could be the mixer might be fried.
SSPC,
Cool.
SNK,
All right, so we know what the issue is. You're not losing your mind. Um,
NBIZ,
still,
KLZ, and I vaulted to the upside.
still kind of weird why it would be. Well, I could still hear the audio. All right, so I need to. That mixer is about 3 years old anyway, so I need to buy a new mixer anyway.
SNK,
All right. If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, July the 27th, 10:44. Markets have faded. The gap are starting to turn now. S&P. Okay, we're at 7,400. We need to hold this level. All right, we continue to lose 7,400. That's not good. We lose 7,400. We could see this accelerate to the downside.
IREZ. UBIX. MIPG may resume in less than a minute. TAPI may resume in less than a minute.
Netflix pushing a bit higher. Netflix communication services are doing well. With the pre-market high just shy of the opening range high. Netflix trying to follow through.
MIPG may res in 10 seconds.
Let's see if it goes here. All right, the S&P is trying to turn.
TAPI may res in 10 seconds.
Apple, Microsoft, Netflix, they're all getting rejected now. Workday, let's see what Workday looks like. Workday, opening range breakout, no follow through. Shopify. Just a reminder, I'm going to be out on Friday. Thursday night, Thursday after the close, I'm going to drive down to visit with the mom for my birthday on Saturday. Spend the weekend with her, be back here on Monday. So I'll be out Friday. All right, what are they doing here?
Maybe the options of where you can sit on airplane.
YYAI may resume in less than a minute.
Okay, Shopify fading. Stocks are just fading. The index is starting to turn up now.
Welcome to Tuesday TV. This is your global news channel. I'm Maya Tusi, and we are going to go to Iran with breaking news that protests have erupted. Army reported on the streets of Iran as regime infighting is now escalating. The IRGC supporters and members are now clashing with the government figures. There are a lot of news that we have to get done.
Mic check, mic check, mic check. All right, yeah, that seems to have fixed the issue. Market's starting to bounce. Okay, good. Okay, Apple trying to hang on to the highs. Opening range breakout. Volume starting to pick up now.
Resume in less than a minute.
Workday. Baker Hughes. These are the top 10.
Press in 10 seconds.
Shopify, top 10.
HIMS.
All right, S&P is turning back up. Needs to stay above 7,400.
PATH. ASAN.
Google turning back up. Google. Let's see what Google looks like. Google.
FIE vaulted to the upside.
Pre-market high bounce. S&P continuation. Apple.
Did Pythagoras have a theory on any other shapes? Patricia? What's more valuable, the art or the mineral? Interesting. But is the portfolio income resilient to rate changes?
At PGIM, we're a global asset manager who believes the market rewards those who challenge it.
Tesla starting to turn. Tesla.
Can I offer a different perspective?
Tesla turning.
Rollover headache cost of futures themselves. Are you trying to gain market share in this overall industry?
I think we
PATH.
look at ourselves at servicing both retail as well as institutions. If you look at gold or silver, they are products that are used by retail as well as institutions. They are a store of value, and perpetuals provide for a continuous exposure. They don't have any expiry, which means that you don't have to pay the costs. They concentrate liquidity in one contract. So there are many benefits that both retail as well as institutions can have with these perpetual contracts.
I know with the crypto perpetual contracts, they trade 24/7 and as does crypto, and that's one of the appealing things for this. For now, you're just matching the underlying market, which
PATH.
trades 24/5, so only 5 days a week. Could that change, Mitch?
Yes, we wanted to start off with basically matching it to the underlying markets. There's a lot of things happening in the financial sector today. There are many other markets that are moving from weekdays to weekend trading, or potentially move from daytime trading to 23/5. Our
you see pushback? Is it harder to pass regulators when you are encroaching right on the doorsteps of more traditional exchanges?
Well, our thought process is that we are not necessarily going for the market that looks at dated contracts with these products. We are not looking for those constituents who like specific expiries in the future, because that's not what perpetuals offer you. Perpetuals offer better pricing. If you look at a price of a perpetual on any, whether it's a crypto or any other asset class, compare it to the cash market or the spot market price, you will see that they track much closer because of things like funding adjustment and so on and so forth. They also provide, because of good price matching, they provide for better risk management. And in addition, because there are no rolls, they are much more cost effective. So when you make these innovations, obviously there are incumbents who will look at it, because there's a lot of fees associated with rolls and others that may potentially be impacted. So, but our view is to provide better risk management at a better cost, and so necessarily we don't think ourselves competing against the
Or
traditional
watching Tesla, S&P turning back up.
there are a lot of use cases like a agriculture company hedging a future date or an airline company hedging a future cost of oil. But we are not competing, or we are not providing that marketplace at this point in time. We're looking at purely folks who want continuous exposure at a better price and improved risk management.
Videsh, how do you respond to the broad criticism, which I'm sure you hear lobbed at Kaushi a lot, and not just you, your competitors too, that it's the casinofication of everything, that you're essentially allowing for more risk, and more risk specifically along the lines of retail investors that they perhaps wouldn't have already taken. And apologies to rush you here, I got about a minute left.
No, I'm glad that you asked this question, because the perpetuals we offer, we should actually have a different name for it. We should call it regulated perpetuals. What we are offering, we are not innovating in
Futures
regulated
continue to
perpetuals.
climb.
We are offering perpetuals
S&P
only that
continues.
follow the exact same routine as a traditional futures that trades. Traditional futures have a lot of leverage. If you look at some of the traditional futures like S&P futures, of our crypto perpetuals, they only have 6 to 8 times leverage. We also do not do things like auto liquidation through the clearinghouse, which is something very inconsistent with how a traditional futures manages risk. So there are many things, and I think we need to distinguish between a regulated perpetual and what trades offshore for a better answer.
Udesh, thank you so much for joining. Really appreciate your time this morning. Kaushi Chief Risk Officer, Udesh Shah.
No city is immune from financial challenges, but with Assured Guaranty's municipal bond insurance, investors' bonds can be. Assured Guaranty, a stronger bond. When control of Congress changes, entire sectors, like energy, can move with it. On Interactive Brokers prediction markets, Republicans have about a 19% chance of keeping the House as of July 7th. Think that probability is too low?
S&P still climbing.
Think it's too high? Buy No for 81 cents. Each correct prediction pays exactly $1 per contract plus interest. At Interactive Brokers, you can trade that prediction market and hundreds of other candidate races. Trade prediction markets alongside your stocks and options. The best informed investors choose Interactive Brokers.
Hi, my name is Wally, and this is my wife Becky. We are standing in our new remodeled showroom at Sun Space in Myrtle Beach.
We're a veteran-owned company, and we've been building custom sunrooms for over a decade.
Our dedicated team ensures high-quality official work on every project, no subcontractors involved.
With 3 custom designs to on-site project reviews and permanent assistance, we make the process stress-free and easy for you.
Our goal is to bring your vision to life. Come see us at our showroom and let us build the perfect sunroom for you.
S&P still climbing.
I've been using Experian Boost to help raise my credit scores, but Experian Boost is even better because now my monthly insurance payments could help boost my scores too. It does it instantly and it's free. So get it through the Experian app.
Finnish style conversation.
Q's rising.
Finnish style refreshment. The Finnish long drink. You have to try it to understand.
Q's looking good. Tesla rising. 335 stocks advancing on the S&P 500. 64 on the Qs, 100 stocks, 64 out of 100 are rising. IWM also working. IWM off the low.
Doors. Connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, your advisor helps you build a personalized, tax-smart investment strategy, identifying opportunities across your entire portfolio.
Top 10 on the NASDAQ 100. Workday, Shopify,
Because doors were meant to be opened.
Thomson Reuters, Baker Hughes, Autodesk, MicroStrategy, DoorDash, Intuitive Surgical, Synopsys, Adobe, Copart, S&P 500, Workday, Baker Hughes, Tyson Foods, Autodesk, Dollar General, DoorDash, ISRG, Synopsys.
This is Bloomberg Tech. Coming up, we speak to NVIDIA CEO Jensen Huang as the AI industry gets back to talking circular financing. Plus, this week's Power On, all about Apple taking on Meta in the smart glasses department. And the biggest week of the year so far for big tech earnings. Microsoft, Meta, Amazon, many more on deck. Our top story. The technology world is talking about circular financing again. Today's big number, 750 billion. That's the potential value of a fresh round of AI infrastructure deals Nvidia's working on. The first piece, Bloomberg reports Nvidia's in talks to guarantee up to $250 billion to help OpenAI lease computing from SoftBank's planned data center in Ohio. It's also discussing, by the way, financing $350 billion of OpenAI's Nvidia chip purchases.
S&P starting to fade a bit right here.
The second piece, a $500 billion plus deal with SK Group. Nvidia buying SK Hynix memory. SK builds AI infrastructure using Nvidia systems. On Friday, I discussed the SK deal with Nvidia CEO Jensen Huang in San Francisco.
This is the golden ages for Korea, as you know. Their semiconductor business is booming. Their industrial business is booming. You know, this is a country that has the ability to help the world build out AI infrastructure, but they're incredibly adept at adopting new technologies, and is a really technologically forward-leaning society, and they love using AI. AI has really diffused throughout their society and their industry, and so this is a great time for them. We're announcing several things. We announced a big partnership with SK Group, where our companies are going to enter into a business partnership where we do over $500 billion of business with each other, whether it's consumption of and purchasing of memories or selling AI supercomputers to them as they scale out 2 gigawatts of AI factories. There's a whole bunch of other announcements. We're investing $1 billion in Naver to help. They're the Korea's leading AI cloud. They're going to scale up in Korea up to they're going to scale up 200 megawatts, I think it is, and they're going to expand across the world. And so we have a whole bunch of announcements that we're making today.
With the expanded SK relationship, there's also sort of more direct involvement with NVIDIA on the roadmap for HBM, future generations of HBM. Talk about that. You know, I remember you being on stage earlier this year saying 5 years ago we told our supply chain what was going to happen, and it did happen. And you gave some credit to the memory makers in going with one journey, but clearly you want to be involved in the direction of travel for future generations of HBM.
Yeah, we're working together on, of course, we started with HBM2, worked on HBM3, 3E, 4, 4E, and then beyond. And so we've got a whole roadmap of memories that we're working on together. It is also the case that the semiconductor industry has really changed. And the reason for that, because we used to build computers for people to use, and we're going to still continue to build incredible computers. These are now processing AIs for humans to collaborate with. But in the future, we also have AI agents and robots, and they're going to be using computers. So instead of just a billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry that's built on top of the chip industry surely is not big enough. And so this is one of the realizations of the semiconductor industry, that now computers are built not just for people to use, but
S&P continuation.
that
Shorts
the
covering.
industry is probably going to have to make some
336 stocks advancing.
today over the next decade or so. So working with our partners in Korea and around the world
Qs.
to scale up the supply chain of semiconductors so that we're prepared for this AI future is really important.
That was part of my conversation with NVIDIA CEO Jensen Huang from Friday, and the deals aren't stopping. Just this morning, NVIDIA announced a substantial investment in Ilya Sutskever's startup, Safe Superintelligence. SSI says the partnership will increase its computing power tenfold over the next year, allowing it to scale its AI research. Meanwhile, Musk is asking another question. Is NVIDIA creating a feedback loop by helping finance demand for its own products? Joining us now is Alison Porter, Janice Henderson Investment Portfolio Manager on the Global Technology Leaders team, and NVIDIA is a top holding. SK's in there as well. A lot of news flow to digest, but that is the question once again. Is this circular financing? And if it is, should we be worried about that?
I think when we think about circular financing, it's a
Tesla back to
it's the
VWAP.
answer to a circular problem, which is that the ability to be able to grow AI revenues and applications is being constrained still by the capacity that
Apple's still going.
manufacturers have.
Apple's still going
As
here.
the market continues to be surprised as Alphabet and Meta later this week and Amazon continue to push out capex, push up capex, not just for 2026, but for 2027 and 2028. The flip side of that is Nvidia doubling its free cash flow year over year. So it makes sense that Nvidia, at the heart of this ecosystem, is trying to help resolve some of the secular problem that we have in being able to help underwrite some of that growth. Now, there is a point at which that can be problematic. We don't think that that's there because tech still has amongst the
Apple.
strongest balance sheets in the market. But we'll continue to keep a
Apple. Let's
close
see what
eye
Best
on
Buy looks
that.
like. Best Buy had been up.
The truth
Best
of my
Buy.
view on it is that in the case study I gave, where Bloomberg reports that NVIDIA would guarantee the lease financing, but also finance OpenAI's postal chips, our own analysts would say, well, actually, the banks might look at that and say, oh, good, NVIDIA's involved. That gives us confidence. It gives
Google
liquid
trying to
investors in
go.
the industry confidence to get involved in the project. Is that something that you
Google is
see
also trying to
going
go.
on? The NVIDIA effect that the
Back up to the
market is
highs.
benefiting from?
Looks like it's going to be a
Nvidia has
fairly
been
large body candle, but it's oscillating
with
around VWAP.
Meta and Alphabet. So I think that's important. I think we have to look at ultimately it's about will OpenAI continue to generate revenues and the kind of gold standard that investors are looking at here is not so much the capex that they spend, but really whether that annual revenue run rate that they have is going to grow more quickly than the capex run rate that they require. Credit markets continue to look at that, but just the actual quantum and this magnitude of this capex raising means that an important lever for Nvidia or some of these companies with the strongest balance sheets and strongest free cash flow to be able to back that because it's difficult for the credit markets to be able to underwrite that otherwise.
Find that so interesting. I think, NVIDIA ended its fiscal 26 year with $97 billion of free cash flow, and I had to blink, do a double take that the street sees $206 billion of free cash flow next year, and to many that might even be conservative. Final one on NVIDIA. What's the metric that we track NVIDIA by now, right? Is it as simple as top line growth? Is it as simple as free cash flow? Because they clearly
S&P
feel like
fading.
they have a near technical monopoly in compute, and nothing is really slowing down.
It's such an interesting question. I think we go back to how we used to think about Apple. The key metrics that we have to think about for NVIDIA are very much how they grow the ecosystem. So just as people used to wonder if, Apple was at saturation, if it was just about the number of iPhones that they sold, for NVIDIA, it's beyond just how many GPUs or what the next generation is. It's really
AMD
about
bounced. Looking
NVIDIA
for a follow
growing the
through.
ecosystem and remaining core to the AI ecosystem overall. Because the valuation on NVIDIA is really inexpensive versus other semiconductors, versus the rest of the AI complex, because the market hasn't quite bought into the sustainability of this. And we think really developing their position in the ecosystem, the software and the platform aspects, as they develop, is really going to help enhance not just their earnings, but the multiple and how investors value that.
Appreciate that a great deal. It's a big week. Maybe a big week every week at the moment, but in the earnings context, wow, we really get underway. So Meta, Microsoft Wednesday, Apple on Thursday, Amazon on Thursday. It used to be really simple. If capital expenditures went up and there was top line growth, then great.
S&P trying to bounce. Looks like a little profit taking at the moment. S&P, the Qs.
Kind of the watch for you this week.
Yeah, I think, and we learned this
Qs, same. We bounced. A little profit taking.
looking
This
up the
violent
dividend
bounce
yield
most likely has a lot to do with shorts covering.
2%. And previously, we were watching these cloud divisions and saying, are they going to grow revenues more than capex? And that was certainly the case versus just the cloud division. But we're now looking at that from an overall perspective. So the market will want to see the not just Amazon is growing its AWS division, but that overall we're starting to
AMD
see
down
revenue growth. And I think
7%.
one of the golden metrics ultimately is going to be at what point we see an inflection where
Shopify is at the
companies
top of the list now. Shopify.
above their capex. And it doesn't look like, given all of the signs
Walmart,
of
nice follow through.
growth,
Watch list.
certainly materially for 2027, it looks like that's going to be a 2028 event. But the market's going to look for continued growth on AWS, continued backlog growth, and seeing that they're being able to manage those costs. And margins are very important, particularly at Amazon, the largest cloud division. They've got a huge role to play in orchestrating the cost of AI with their Bedrock division. And that's something the market's going to be looking for how their margins progress, because we saw real margin enhancement there at Alphabet last week.
Alison Porter and Janice Henderson, investors back on Bloomberg Tech. Thank you very much indeed. There's another big story in the chip sector. ASML's European shares down 7.5%. 20 minutes left to go in European session, but on track for this biggest drop since July of 25. At one point, the biggest drop on record. The information reported that a Chinese state-backed technology company has started production of deep ultraviolet lithography tools, DUV tools. A case study, an example that China's domestic industry could bridge the gap with what is the key chip equipment maker in the world in ASML. It's really rocked the stock. And as we get more info, we'll bring it to you. Coming up on the show, Cato Network CEO Shlomo Kramer joins us with an update on his company's financials, but also his take on the state of cybersecurity post that Hugging Face incident. That's next. This is Bloomberg Tech.
Tesla, there's a lot of sellers overhead just above VWAP. There's about 5 blocks of 20,000. Looks like an iceberg trade here. Just above around 310. Just above 310. From a 310 up, there's a lot of offers here. 20,000 share blocks. 1, 2, 3, 4, 5 of them. S&P still hanging out right in this area. Qs starting to turn over a bit.
You can get up to a $3,500 kickoff trade line.
Kickoff starts in just 5 bucks a month. Signing up was super easy. It took a few minutes.
There's no credit check, no hidden fees.
Kickoff is real. Kickoff is the one.
Download Kickoff and get started.
Hi, my name is Wally. This is my wife Becky. We are standing in our new remodeled showroom at Sunspace in Myrtle Beach.
We're a veteran-owned company, and we've been building custom sunrooms for over a decade.
Our dedicated team ensures high-quality official work on every project.
All right, futures starting to turn back down now.
Custom designs to on-site project reviews and permit
what it sees as a shift from companies buying a slew of security products to single platform solutions. Keto's co-founder and CEO,
Apple.
back with us on Bloomberg Tech. This is growth about 40 to 45% year on year. But what's so interesting is what's behind it. You see
Apple
shift in how enterprises are doing business.
hanging out at the highs. Stocks are not following through. They're just kind of pushing up, stalling at the high of the day. Don't chase.
Larger and larger enterprises adopting SASE, as evident by the multi-million-dollar deals of Fortune 500 customers we closed beginning first half of this year. This is driven by the fact that our platform-based solution now is not only about operational efficiency and business agility, but with AI threat landscape, it's a do or die security innovation for the customers. So that has really been a tailwind in mainstream adoption.
What I find further interesting is the different industries or domains that are looking to you. Manufacturing, robotics. You know, people like Jensen Bond tell us that that's the next wave, physical AI, the physical world. You seem to also be benefiting from spend there.
Tesla, no follow through. It's fading with the cues.
With two huge transformations. One is internally
Cues rolling over.
that has, as we've seen from recent attacks, is a very significant additional area to protect, and is facing an increasingly agentic threat landscape. And this is going to replace in every organization
Okay.
the previous generation of
Banks.
appliance-based solution, of proxy-based solutions with true network and security cloud solutions.
JP Morgan gapping up, fading back towards the 20 EMA on the 60 minute, 10 EMA, 20 EMA.
The top story of the last week,
Shopify
two powerful OpenAI models
reversing trend. Shopify looking pretty good.
and mistakenly accessing Hugging Face.
Verizon,
A big moment for AI. You're a veteran of
follow through with Verizon.
security. Your impressions of that?
This is a watershed moment in security where it's becoming increasingly clear that unleashing an army of agents inside the organization creates a complete
Walmart also had a good bounce today. Walmart, little fade from the high right now.
and the need to control these agents, control the user interactions of them, control the other agent interaction with them, and primarily control their interaction with data and critical applications is becoming the number one security challenge of enterprises. And this has
Intel trying to put in a higher low. Intel,
a network security solution like
Intel recovering.
What happened was a frontier lab tested the capabilities of cutting edge models, right? And that was really cheered by industry. They were saying it's not a scandal. We want to see the frontier labs do that.
right.
But in its defense, Hugging Face relied on open weighted models or open models where the guardrails on that model, the open model, diminished its ability to defend itself. So now we have this huge open close debate as well. You understand the field. Explain your position on that.
Yeah. So 2 points here, please. One is the fact that I do not expect the model companies, whether it's frontier models or open source models, to provide the cyber protection to these
Intel,
models. It always has been the case that cyber is a very specialized category that needs to be addressed by specialized company that focus on that. And that's exactly what we are doing at Cato. And the second is it also has nothing to do with nationality. It's not about the open source model, which is very specialized category. It's about the cyber protection. And that's exactly what we are doing.
5 weeks opened higher. We're now a lot lower, particularly in chips. We're going to rattle that all. It is halftime. We'll be right back. This is Bloomberg Tech.
S&P trying to bounce. Stay above 7,400 be good. I would love to see it above the 50-day.
Now, with internet across the nation. We are joined today by Ted, who's helping us connect to other small business owners.
Thank you, ladies. And I think we have our first caller from the live stream.
Everyone around me thinks I know what I'm doing, but sometimes I don't.
That's just being a business owner. Yeah. Every expert was once a beginner who just didn't quit. That's deep. I read it on a throw pillow.
When the connection matters, it has to be AT&T.
You can learn a lot from a throw pillow.
Put that on a throw pillow.
Merch!
When control of Congress changes, entire sectors, like energy, can move with it. On Interactive Brokers prediction markets, Republicans have about a 19% chance of keeping the House as of July 7th. Think that probability is too low? Buy yes for 19 cents. Think it's too high? Buy no for 81 cents. Each correct prediction pays exactly $1 per contract plus interest. At Interactive Brokers, you can trade that prediction market in hundreds of other candidate races. Trade prediction markets alongside your stocks and options. The best informed investors choose Interactive Brokers.
No follow through. Starting to fade again. All right, looks like we're going to take out the low. Futures. So reducing your exposure seems to be the wise choice right now. If you're doing short-term trades, S&P needs to get back above the 50-day. RSP looks good. So it's obvious that a lot of the weakness has to do with tech. The equal weight index, S&P equal weight, no stock's more important than any other. Made a high for the week, starting off testing last week's high at 216. So that's telling us the New York Fang isn't performing. In particular, tech is not performing. You can see New York Fang; it's only 10 stocks, but you got all the semiconductors down this morning, like AMD. AMD is down quite a bit. SOXS is bullish.
These MOEs still continue to build incredible computers. These are now processing AIs for humans to collaborate with.
SOXS looks like it's going to keep going.
Have AI agents and robots, and they're going to be using computers. So instead of just a billion people using computers, we're going to have 100 billion agents and billions of robots all using computers. The computer industry, the chip that's built on top of the chip industry, surely will be flipping out.
Welcome back to Bloomberg Tech. Some of my conversation with NVIDIA CEO Jensen Huang. Let's get back to today's big number, $750 billion. That's the potential value of a fresh round of AI infrastructure deals NVIDIA is working on. Markets have reacted in a really unusual way to a number of headlines this morning. The concerns about circular financing, the idea that NVIDIA is bankrolling the same companies that are buying their technology. There's some nuance in that $750 billion number. We need to understand it, but having opened higher, NASDAQ 100, but particularly chip stocks, are now markedly lower. Joining us for more is Bloomberg's Ian King, who was with me in San Francisco Friday night, trying to understand what was a big AI event hosted by the Korean government. Let's just focus on the SK bit. $500 billion. I had the opportunity to ask Jensen to sort of just explain what it encompasses. You also
Semiconductors are selling off.
Yeah, so the question, the total is, we still don't know. I mean, a while ago, big numbers were a good thing. It was great. There was some rhetoric. Now you need to bring the details. So this could be
Okay, Apple's still going.
Jensen's response to me is basically all of the above, right? And there's no
Apple.
timeline for the deployment of
Apple looks like it wants to keep
GPUs,
going.
but SK Hynix has 60% market share in high bandwidth memory. Nvidia has a greater market share of compute. So that's kind of how it was explained to me. There's the open AI piece of this, and one thing I think the audience really appreciate is there's all the reporting about what Nvidia is or isn't committed to, but what argument does Nvidia make historically about whether it is or isn't circular financing?
Yeah, I mean, it's pretty much what Jensen said to you, which is, look, this thing is going to the moon. It's growing and it's growing and it's growing. I'm making these investments to speed up that growth and to facilitate that growth and ensure it doesn't stall. And guess what? If I'm buying parts of these fantastic companies,
Apple.
that's going to provide a great return on that investment. That's his argument. And, but obviously underpinning that is that
Apple fading back to the opening range high. Very choppy day today. S&P made a new low.
Yeah, that's right. I think there's a couple things happening. One, as you mentioned, Palantir is becoming the stand-in for Silicon Valley tech, and in particular, type of Silicon Valley companies very close to Trump administration, working with the Pentagon, working with Israel. They have to talk about baggage. The outspoken CEO Alex Karp, co-founder Peter Thiel. The second component is that it, the impetus for our story was that the French intelligence agency has swapped out the Palantir contract for a local provider called Chaps Vision, working with the intelligence services for the past decade. This is kind of national critical work, and you see increasing amount of officials in Europe saying this is something that we just can't afford to outsource.
Well, this is being played out in the public domain.
S&P trying to bounce.
Posted this on Instagram. The divorce line that we opened our conversation with. It's a case study, but are the European nations kind of following in his example?
I think that was far more political theater than when you're see elsewhere. But we've seen the defense minister come out and say we're looking to phase out Palantir. We have some reporting in our story that Poland is looking for alternatives as well. The company we profiled is Chaps Vision, a pretty, I would say, relatively obscure.
S&P, we need to get back above 7,400 for starters. Then VWAP. And of course, ultimately, we want to get back above the 50-day. A lot of negative gamma down here.
With our colleagues in research, you've essentially calculated what it's going to take for Europe to get to a pace where it's not reliant on US tech. What's the headline dollar figure and what does it account for?
Shopify, top of the NASDAQ 100, Shopify. Even that's having difficulty trending today. Workday, it's higher, but having difficulty trending. Thomson Reuters, that's trending a little bit better. Thomson Reuters, TRI. Autodesk, software, not a bad day in Autodesk.
The counterpoint to that is it's much cheaper to build an alternative to Palantir than it would be to build an alternative to OpenAI and Anthropic.
Bloomberg Smart Bergen from London, thank you very much indeed. We have more on defense tech. California startup Antares Nuclear raised $470 million to advance its plan to build tiny reactors aimed at supplying power to US military bases. The Torrance-based startup
S&P 500,
Energy Department program aimed at acceleration of nuclear power. Venture capital firms Paradigm and Navy Capital are co-leading the funding round.
DoorDash, better earlier, DoorDash.
By 2028. And the Financial Times reported that SpaceX's European rival, the exploration company, is in talks to raise at least
Apple turning back up. Apple, a lot of chop, a lot of slop.
the funding round, which isn't yet finalized, is aimed at financing the exploration company's efforts to develop the first European reusable space capsule, which will be used to transport cargo to the International Space Station and its planned successors, according to the FT report. Let's stick with private markets and deep tech. One venture firm believes investing in single points of failure, or
What's Rocket Labs doing? They're talking a lot about the European version of SpaceX. Rocket Labs not having any luck pushing higher.
single points of failure. You and I have had really robust conversations about
Rocket Labs.
how to be
S&P trying to turn up. Looks like a bear flag. SOXS, semiconductors, SOXS, stalling at the highs. Let's see, Comcast. Communication services, that group was doing a little bit better. Netflix is trying to push higher. Netflix. Okay, Netflix is into the gap. Netflix into the gap. Looking better.
companies that have some edge that is oriented on these single points of failure. And those single points can be technical in nature. So think um, the heat shielding on a hypersonic missile. They can be physical in nature. It could be a
Netflix into the gap and bullish.
in that domain, or it could be regulatory or labor or several other key facets we're focused on.
So I want to get deeper into an area you're talking about. Drones are a good case study. So you can go out and invest in a drone company, but the fetters or barriers to the drone industry are their supply chain. So it sounds like what you're trying to identify is that problem, and then the people that are solving specifically for the supply
But in his London, you have to try it to understand. In which you have new global technology.
Stay right here, live every weekday.
Big tech earnings coming thick and fast this week. Bloomberg's Ryan Pasadaka here to talk us through how markets gear up. I would say there's a lot of pressure, particularly in semiconductors right now. Look, that's a lot of names. Microsoft, Amazon, and Meta. It's going to come down to capital expenditure, right? Like the vibe has changed on what Wall Street needs to see to get a pass on the scorecard. Someone told me last week that it used to be the more capex you were doing, the better. Now it's completely the opposite. Now the less you're doing, the better. We saw last week even Alphabet, which by most accounts is the best positioned company of the big four hyperscalers to compete in AI. It has Gemini, it has chips, it has Waymo, it has search, it has YouTube, it has all these different businesses that it could use its AI.
Google trying to stay above the 200-day moving average after earnings last week.
Its history as a public company. Now we have, like you said, Microsoft, Meta, Amazon. They're all reporting this week. The spending plans are going to be, I would say, by far the most important thing people are watching for, as well as their ability to kind of articulate why they feel like they need to continue spending this much, and they need to show that it is translating to improved growth, improved prospects, improved efficiency. There's a big hurdle here for them. Reading your weekend piece with Jared about how earnings collide with the supermarket gold fire is the outlier, right? Different to the hyperscalers. What do we look for there?
Intel,
I'd say the thing I am more paying attention to is how it's talking about consumer prices. Obviously, memory is huge demand this year because of the AI infrastructure build out. Now, Apple recently raised prices for some products, but not the iPhone. So it's be very interesting to see what they say about the landscape with respect to memory. Is it having an impact on demand? Is it having an impact on margins? Are they thinking about expanding their pricing to other categories like the iPhone? Of course, we have the foldable iPhone that's expected later this year. We don't really know what the pricing is going to look like there. Maybe this is a way for them to kind of sweep some of the memory prices under the rug with just a higher price target for this new phone. We don't know, but that's going to be the big item to pay a lot of attention to. And imagine memory's going to be the real issue for people.
Just very, very quick. The market's kind of weird today. It seems set for the financing concern. Is there anything else you see?
Well, one thing I would just flag that we'll see NVIDIA down quite a bit today that looks like, at least at the moment, Apple is once again the largest company in the world. So really right now, this the bifurcation in the market. Apple not really participating in the AI spending trade. The stock is a little bit rewarding. None has been falling back.
Soon as Ryan Pasadaka across everything. Thank you so much.
That does it for this edition of Bloomberg Tech. And as Ryan said, this is what markets look like. Big sell-off in chip stocks, NVIDIA down 5%.
Some conversation around circular financing, which you can recap on the podcast. It's fine on Apple Spotify, iHeart, and also on the Bloomberg SoundCloud. Have a good week. This is Bloomberg Tech.
NVIDIA pumps. Long day.
Did you know 95% of people have personal information leaving the only the site criminals? In today's digital age, your personal information is under constant threat. Hackers are always lurking.
NVIDIA
Steal millions of
long
dollars.
day. Deep call.
But it doesn't happen this way. Join the millions who trust Informatic's comprehensive cybersecurity protection and take back control of the digital life. Get protected now at PCNet. I'm Mark Zenley. I believe our institutional lending of government wants America. But you can't spend more than you have. Sanctity of dignity of life needs one. In God and be safe outrage. We get agent. One Brent show. My record as congressman and governor, state and governor.
Google hanging in there. Contemplating selling some premium on Google. We had an iron condor. I took it off. Thinking about selling some more premium down here below the 200 day. Like 20 deltas, whatever. Netflix still pushing. Netflix still going here. Netflix. All right, so it's 12 o'clock. I wonder. Okay, Netflix looks good. Netflix acting a lot different. Netflix acting a lot different.
5. So you saw the numbers there for triple crowns and how ETFs will break all three categories if we progress at the same pace by more than 30% this year. There's no let in the pace of issuance clearly. I believe the Wall Street Journal called it an ETF crazy train, borrowing Eric's penchant for pop culture references. What do you chalk this up to? I think it's really a confluence of factors. We have a market that continues to defy gravity. You know, the more we talk about concerns about valuation, concerns about concentration, the more we buy some of the leaders, the more they leave. Anytime they reset, we buy more of them did. So it's a market that keeps on going. I think it keeps feeding with momentum, and momentum is great for not only product innovation, but more asset managers want to come into the game. It needs more trading, folks are looking for more opportunities, and so it just keeps going. It flows. I think we're a little bit like the Mag 7 now. If we don't exceed expectations,
Netflix continuation.
it's such a letdown. We're just going to keep feeding this machine because we have to.
I might admit last year's ETF even depth, I said this is as good as it gets because, again, it's just a rare thing to break all three records. The volume record is interesting to me because typically volume only goes up if there's a crisis. It's correlated with the VIX.
A massive sell-off.
Yes, because people start tweaking their
Zero
portfolios.
DTE.
ETFs
Call.
and it's
Stop.
volume. My theory is that there's just so many more products.
NVIDIA
We have
Pulse.
this legacy
Long
aspect,
day.
and so it's just way more activity, and also marches under Trump have been really crisis central, so there has been a little crisis. But I think that is what's lifting the volume like that, and maybe
Stocks respond in a positive way. So somebody who's looking company by company, what's that telling you?
Yeah, it's interesting. I think on a lot of fronts, to your point on the beat rate, I mean, you know, we have seen 80%, 82% of companies beat so far, but the price action hasn't
NVIDIA
responded.
Pulse.
S&P on the move. S&P.
The story today, right? We heard from Google last week, and again, there is momentum in
Zero
CapEx.
DTE.
Jim, I think that's where we're seeing what's happening in terms of the spending. Another $15 billion from Google. And the reality is it's about the free cash flow, negative free cash flow. That's been the story.
S&P moving back into the range.
So I think that's something that we're closely following. But also to Joe's point, I think what is positive to me is the RSP working. Yeah, right. It is positive so far this month where the S&P and the Nasdaq are negative. Breath is a positive factor going forward, seeing healthcare, financials, industrial starting to perform. So I do like that as a setup going into that.
Long
Steve,
day.
you know, one of the things that the folks at Alphabet said in reporting their numbers and giving their guidance is
Long day.
it's still early. And that used to be reassuring. To investors, it's early, okay? That means that there's so much more growth to come. Investors don't want to hear
Zero
it.
DTE.
They kind of
Pulse.
almost want to feel like we're getting to a point
Fuse
where
pulse.
we have enough,
Long day.
or we have enough for now, and we're going to let the scaling laws give us some profits on the other end of it. CapEx is like eating the economy, right? We're worried about overheat, seeing capital usage, and what the Fed has to worry about in relation to it, and what the corporate bond market has to deal with in response to it.
Yeah, I mean, there are a couple things here. First of all, I don't think it's all about AI. I think it's about Iran and oil. And now we're seeing, basically, with oil coming down, the market not moving, so maybe shaded more towards the AI trade.
I mean, consumers are up, industrials are up, banks are up today, right? So, I mean, parts of the market that got hit on high oil are responding.
Yeah, but the Iran cycle, right? The cessation in hostilities are actually firing.
S&P pushing back above 7,400.
So we're depleting supplies everywhere.
Zero DTE.
Ukraine,
Pulse.
they got a lot of
Stop.
orders. So that really was an issue because DOW requires that you get rid of your old weaponry or get new. So that works. They got some new stuff. But this isn't going away.
Yeah.
And that's going to be a constant overhang in the market. So that's one thing. Now, when you go to AI, the question is not if they're going to stop spending, because they're going to. And if you don't spend now, if you take a long-term view, a short-term view, what's my ROI today?
Yeah.
You know, then you tell them stop spending. Then going out a few years, guess what? They'll be catching up to the ones that do spend. So you have no choice but to spend, and you don't know what that spending will be like. Now, you hope that
do what Meta does, which is you can take that excess spend and build a separate business out of it. So they should be applying. Now, you have to, there's a disconnect, always is a disconnect between when the spending ends and when the stock,
Zero
the
DTE.
climbing of the stocks or spending or declining ends. I think that's where we're getting near. Now, I think you have to expect that Meta and the others going to announce additional AI spending. We already know Meta's increased by 40 billion, right? So I think the market's absorbed that already. So it's come down to the fundamentals. When you have almost 100% cloud growth, like Google had,
S&P continuation
I think that should control.
coming off the low.
So yeah, it's so much data out, that they have that has to go to the cloud. So look, nobody likes seeing the volatility, but I took the opportunity and from running myself, I hedged Google on Friday, right? Because I think that it's extremely cheap, and I want them to spend because I want them to be able to capitalize on AI as very, very few companies do. So yeah. So look, I'm sort of sanguine about what's happening. I'm not happy about, the marks in the portfolio, but you don't lose money until you sell something. So just ride it out.
Let's get into one of the big pressure points, at least this morning, which is NVIDIA. Christina Partsinevelos is taking a deeper look at how NVIDIA is becoming the financial backstop of the AI build-out. Christina.
All right, S&P's climbing.
Pay for them too, putting its investment grade credit behind companies that maybe can't borrow on their own terms, guaranteeing their debt so they can raise cheaper financing to buy eventually NVIDIA hardware. The biggest sign of that is that a 10 gigawatt project could end up the largest data center ever built. CNBC, specifically Kate Rooney and her sources, confirmed that NVIDIA is in talks to backstop up to $250 billion in financing.
S&P going green here shortly.
To be clear, though, that's not a check that NVIDIA is just writing right away, $250 billion. It's a guarantee letting lenders underwrite NVIDIA's credit instead of OpenAI's. Smaller versions kind of already exist of this, from revenue backstops for neoclouds like Sharon AI, which is an Australian firm, to unsold capacity commitments with CoreWeave. And in its annual report, the 10K, NVIDIA says it has roughly $3.5 billion in guarantees out to early stage companies with a plan to take over their leases. Books NVIDIA revenue, which is the concern about circular financing. The upside is locking in demand and tying itself to a top AI lab, which would be OpenAI. The risk, as Wedbush just put it in a note, is that it's now exposed if AI demand slows or OpenAI falls behind. But again, Mike, really important to reiterate, this is just a headline right now. We don't have the actual confirmation for that $250 billion backstop, but it's definitely something.
For sure. And I guess to be clear, Christina, $3.5 billion is just a tiny little blip in the context of NVIDIA's balance sheet at this point. We're talking about $500 billion of expected free cash flow this year and next. And I think one of the big questions is, how are they going to deploy that? I guess the question is whether this, well, many questions. One of them is it entrenching NVIDIA in one version of how this develops from here? In other words, are they staking their future more toward OpenAI success versus others? It feels as if it's kind of everybody
Zero DTE.
on some level, in bed with everyone else.
So then you just answered your own question, right? Because NVIDIA is not just focusing on OpenAI. There are many, many other examples on a smaller scale, larger scale. NVIDIA is constantly signing these partnerships, extending these collaborations with firms. There's different price tags that are associated with it. But if anything, it provides even more strength for NVIDIA because it ingrains NVIDIA in the entire AI build-out, not just on the hardware front. And very good point that you raised is the free cash flow, right? NVIDIA is still the main supplier of all of these hardware chips and the networking, and they even said it, they're the largest networking company in the world, and the software that goes behind it. So they have the money, they need to do something with the money, and here's a great opportunity to, invest in possibly the largest frontier AI lab in the world, and do it in a way that does add some risk to their books, but not so much that they're handing out cash blank checks.
Right, exactly. Christina, thank you very much. Joe, to what degree, as an owner of NVIDIA, do you have a handle
Very choppy day.
on their various exposures and collaborations
of NVIDIA, that is a personal position that I've put on in the last several weeks, and I just want to kind of walk everyone through what's going on with NVIDIA. Let's keep something in mind as it relates to moving into the summer months. It's very clear that volumes decline, and not so much the liquidity conditions decline, but you see positioning come down. And that's been the story in memory and semiconductors since we went parabolic with Micron's earnings at the end of June. There's had an opportunity to build momentum in NVIDIA for the first time really since the fall of last year off of the June lows. And it looked like we were doing that. We were up to 214 on last Wednesday. We saw a reaccumulation of positioning for people that had stepped to the sidelines, frustrated with the sideways consolidation. That's kind of now neutralized that momentum that was recognized over the last several weeks. You're back to it being what I would call a yellow light. You're still against what would be a supportive 200-day moving average down to 192 and a half or so. And below that, you have the June lows at 189.80. So this position that I put on 198, then an additional purchase up at 208. I will use those positions for the break below 192. And it's very clear that the momentum that we're building over the last several weeks has been neutralized. Here's what I'd say. That I'd be more concerned about NVIDIA to be an indirect recipient of revenue of business by funding those like
long dated, deep puts, NVIDIA pulse, long dated, deep puts. AMD, long dated, deep puts. Zero DTE puts. SAP. NVIDIA pulse, long dated, deep puts.
For 10 seconds. When shopping for personal loans, dating switch rates can be deceiving.
Micron pulse, long dated, deep puts.
Because Protocol uses your credit profile to show you real logics and clear terms without hurting your bet source. No smoke, no mirrors, just personalized rates. Download Intuit Credit Karma to get started.
It's the dog days of summer, which means you can make our slow time the best time to remodel your bathroom, and you save 20%.
Why ain't I made
Whether
rest
you
in 10
want a
seconds?
new shower or a new bathtub, you save 20%. If you're looking at a full bathroom remodel, you save 20%. One of the most popular projects is taking out the old bathtub and replacing it with a new SureStep walk-in shower. Our dog days and summer sale saves you 20%. Give Newberry Home a call right now or visit newberryhome.com.
It's kind of like my Airbnb.
to maybe build up a bit of negative.
Think about what the problem is to their customers. The amount of individuals that we have buying watches that mark a milestone in their life to provide that special gift for that life moment, I think it's incredibly rewarding.
You should not have to worry about
We built the platform
and
and
money.
everyone be those factors.
Really trying to be here to just like, make those dreams possible.
Are we in that AI bubble, right? Now, I'm in the camp that we are not. I'm in the camp that we are in an industrial revolution because it's changing the world. Separate from the dot-com era,
MSS.
which is where you and I disagree a little bit. So let's talk about your perspective.
I do think it is not a bubble.
we are absolutely in another industrial revolution. I think if we study revolutions going back to steam, even,
Right.
it is
Right.
compounding.
Right.
That's important to keep in mind. It is very different.
Do you
I
have
do
the
think where
numbers
our
in the
argument was
lesson?
coming in is I do think the dot-com era was absolutely an industrial revolution because it gave us access to data,
Okay.
which was imperative to what we need now. So I think that was the era of accessibility where you could look up anything, good or bad. There's always some
Agreed.
and now we're in this era of data curation and
Okay.
expert oversight, and that leads to artificial intelligence and automation and the productivity increases that we saw as a result of the dot-com era, I think, are compounded and even higher now.
Well, okay, I would agree with you that. I just don't see it. Look, I lived through that dot-com bubble, right? I mean, I was actually employed in the industry during that dot-com bubble.
Don't
it
forget
was certainly
shenanigans.
a change. But I regard that as I didn't, as I
Do you
look
have
back
the
on it
next
now,
numbers
I
in 10
wouldn't say
seconds?
that was an industrial revolution. I think this is an industrial revolution because it's changing the world in ways that we couldn't imagine. The dot-com bubble, and it was a bubble,
It was.
was just, it was about access to the internet. And to your
Definitely not
point,
make
yes,
less
you
than
look
10
at the
seconds.
80s and look stuff up. I agree. But I think this is a revolution much different. I think the companies we're talking about today are real companies with real earnings that are changing the world. I don't think Pets.com did anything to change the world.
No, they did. I mean, and that which led to their demise. And
Exactly.
R.I.P. the sock puppet.
Exactly. The soft spot.
Easiest comparison to make is just look at the earnings today versus earnings
Right.
.com, and then we kind of end the debate there. And to me, that's as simple as it gets. The thing that I think is more
Actually, for quite some time, had thought that the Mag 7 should not be treated like a monolith. And I think we're agreeing beyond. Here's where I'm going with that. I agree with what you're saying. How about CapEx and the CapEx light at Apple? However, I will tell you, even though it's a market weight position, which means 6.5%, I'm not very enthusiastic about Apple right now. I have a hard time buying it at this valuation. How did it get to this valuation? Well, it's been the one Mag 7 that's rallied while the others have kind of sputtered. And that's not the first time that this has happened. And we go back a year and a half ago, Alphabet was sputtering, and then it caught wind, it caught fire. This happens all the time. I wouldn't be surprised if Meta, Steve, I got to take it from one of your favorite positions. I wouldn't be surprised if it caught fire. Last week it started to, and then I think it got pulled back on worries about CapEx that we saw, and I was talking about with Alphabet and Tesla. My point on this is that, yes, we can make a fundamental case who did it, why Apple should rally. I will tell you, I'm not enthused, and I think it was just Apple's. I'm making a fundamental case. I'm trying to explain the narrative that gets applied in response to the stop doing what it's doing. Yeah. Okay, we're deciding that's what people are buying it for, but otherwise it's just kind of like, the button to push is buy defense against AI.
Well, it's also its relative performance to its Mag 7 peers and relative outperformance, and it makes it in that regard the one Mag 7 where you can say, okay, this is a momentum name.
Yeah.
But fundamentally, it just continues to get the benefit of the doubt.
Right.
Coming off the Worldwide Developers Conference, the market was disappointed, stock price fell, and quickly recovered. So why has it rallied now to reach a 52-week high? I think it's a relative outperformance versus its Mag 7 peers, and it's the one name that has that embedded momentum.
By the way, that's against NASDAQ 100 as a whole. And Mag 7 is gone. It's for hyperscalers. Okay, that's what we're talking about when you talk about Mag 7. We're talking about bothers me about what you just said is that the market sees momentum and, following outperformance rather than looking at fundamentals. So I agree. It's me. That's never a positive sign in a market when you're chasing stocks, because then you start chasing the jump.
Long day.
We've seen some people there. So the market,
Long
so
day.
it does, and the argument is that momentum is the market registering fundamental improvement. So we're not going to settle with Apple. Right. With Apple, you hear reports of sales, right? People wait for the 18th. And what the best story to Apple is, they're not spending on AI because they're going to wait for AI to get cheap. Yeah. And then they're going to pick the winner. But that may not be. They also didn't spend on iPhone. They've never spent a lot on cameras. They never have to. We got to go. We'll hit them all. Got next. Global taxi rivalry, the competition between Uber and Alphabet's Waymo is heating up again. We're following the latest as the truth breaks down. variables in this report, but I think guidance is going to be key.
All right, let's get into the example trades. Kevin, let's start with yours. What's your approach today?
Yeah, they hit good earnings last quarter. The stock is lower than it was last quarter. It's lower than it was in January. So we keep hoping for good constructive news as this company continues to recover from years and years of underachievement. So I looked at a paper money trade that was a little on the bullish side. It's buying the August 7th, 212 and a half call. That's pretty much at the money where it was at the time. And looking at the expected move, selling the July 31st, 225 call. So a $12.50 call diagonal. It was trading around $6, trading less than 5.5 now. As long as backed off from where it was this morning. So trading about 540, Tom. A $12.50 call. Looking for a move towards that 225 straight, Tom. It was 254 in January.
My phone call. Shenanigans. Zero DTE.
S&P popping.
NVIDIA
If you can turn the tide and get some good news going, some momentum.
Spider
Yeah, this has been a choppy trade over the last
Zero
several months.
DTE.
Initially got hot last quarter, but then has fallen now, as Kevin mentioned, back below $212 a share. But let's break down Kevin's example trade here. Bullish example here using the call diagonal strategy, buying the August 7th weekly options that expire in 11 days, the 212.5 strike call, basically at the money, and then selling in the near term July 31st weekly options that expire in 4 days, sell the 225 strike call. So we're bullish, $12.50 wide call diagonal to the upside. The option market priced in about plus or
Hi,
minus
tickler plus 800.
High tick alert.
So that 225 strike, where you want the stock to go, is about that 1 standard deviation, just outside of it. But if you pay roughly a $6 debit, Kevin mentioned it's a little bit cheaper now. The debit you pay is going to be a risk on this trade. So $600 or $550 if you pay $550 for this bullish call diagonal. Really short-term positioning. You only got a week and a half in this position. You want upside exposure on this one. As you get closer to expiration, got some assignment risk on that short option on the 225 strike call. But this is one of those strategies that takes advantage where you can take a directional bias. You're paying less than half the width of this call diagonal that's bullish, and that's due to the fact that we've got some vol dispersion within the different option series. So in the August 7th weekly options, where Kevin's buying the 212.5 strike call, about a 48% implied volatility on aggregate. In the near term July 31st weekly options, where he's selling that 225 call, about a 63% implied volatility on aggregate in that series. So that vol dispersion lowers the entry point price on this one. Anything above about 214, 215 is going to be potential profitability on this. So on a percentage move, you don't need that big of a rally in the stock over the next maybe 4 to 11 days during the duration of this trade. So keep that in mind also. And we'll see implied volatility post earnings come down relatively quickly. That'll contract that short option that you sold in the near term July 31st options. It'll also contract the one you bought the August 7th also, but bullish exposure to the upside, less than half the width of this bullish call diagonal, taking advantage of the volatility low. Kevin, I would a little bit more directional on mine, where short term also, if you expect some maybe downside exposure like it did last quarter, this gives you that opportunity to get that exposure to the downside. So it looks at an unbalanced put butterfly here in the July 31st weekly options, 4 days to expiration. That gives me that exposure to the downside. 215 strike put in the money by about $3 or $4 now. Buy the 215 put one time, sell 2 of the 205 strike puts, and then buy 1 of the 200 strike puts. So that 205 strike is where you're aiming. That's max profitability on this one. Roughly, I put it in for about a $3 debit, probably trade about 310 right now. So the debit you pay for this is going to be a risk also, just like Kevin's call diagonal on this unbalanced put butterfly. Paid a $3 debit, $300 of risk per spread. Break even 212. We're already below the break even on the stock, or just at the break even now. Stock popped back above 212. But Kevin, if you get some consolidation maybe just a little bit grind lower, you're going to be profitable. But even if it does fall below 200, it's about 2/3 of what you're paying for the debit. So you lose a lot of profitability, but that's all the way below 200.
That directional play when they put butterfly
Zero
that
DTE.
doesn't lose its all of its
Stop.
profits. If the
Zero
stock goes
DTE.
you're longing $10
Stop.
put
Zero
vertical,
DTE.
short a
Hold.
$5
Stop.
put vertical.
Zero
And so
DTE.
even if it goes
Stop.
master strikes it
Holy
bigger
crap.
than you think,
SPS.
you can still have about a $200 profit on this one time. So some of the complaints about a butter.
I think that's probably ultimately the case. Stock made a 52-week low this morning. It's having actually a nice intraday reversal. Maybe it got washed out. I don't have a position there. But there's definitely a needed catalyst for this company as they prepare to report earnings. And on a forward basis, they are very cheap.
Yeah, sure. Let's move to some committee stocks on the move. Robinhood reportedly in talks with Crypto.com to expand the vertical prediction market. All right, Joe, so you own Robinhood. Everyone's racing to lock up this next pool of potential firm activity.
Zero
So
DTE.
Robinhood has done an excellent job transitioning to be a more diversified
Zero DTE.
financial services company over the
Stop.
last several years. They
Zero
still have that
DTE.
reliance on crypto. They're going to report earnings, I believe, Wednesday of this week. And you're going to see that crypto, the revenue there is relatively soft. The excitement comes, what does the future look like for the prediction markets? Remember, the last quarter was not a good one. They had a miss. They eliminated 2% of the workforce. They're going to need to bring down the cost expense growth because it is significant at nearly 40% for revenue.
My
over
company.
30%. So a little bit of a precarious position. The stock is currently down
NVIDIA
15%.
Pro. Long date.
I'd like to see them do some more work on expense management.
Yeah. We can all need to find what financial services is. I mean, prediction markets remain dominant by sport. It's just what you want to say it's somehow adjacent to other trading and portfolio.
Zero DTE. Hold. Stop. Zero DTE. Hold. Stop.
I think they are an interactive brokers. You know, it will be their multiple as well. But I think the common denominator for all of these names, is that it's the retail engagement, strength of retail engagement, and clearly Robinhood will benefit this quarter from Robinhood.
NVIDIA Pro.
All right.
Long
Now
date.
to Contessa Brewer from CNBC News Update.
Thereby, former FBI Director James Comey filed a motion to dismiss the indictment, charging him
Hughes
with
Pumps.
threatening to kill
Long
President
date.
Trump. Comey had
Pumps.
posted an
Long
Instagram
date.
post last May as police shells were reached.
Hughes Pump.
86
Long date.
47 on Carolina Beach. The Department of Justice said that represented a threat to assassinate Trump. The motion insists that post is protected by the First Amendment. Ukrainian President Volodymyr Zelensky is in England for a meeting with Prime Minister Andy Burnham. His first visit from a foreign leader since
Zero
taking office
DTE.
last week.
Hold. Stop.
Zelensky has his work cut out for maintaining
NVIDIA
relationships
Pro.
with Britain
Long
leaders
date.
because Burnham is now the fifth prime minister since the Russia-Ukraine war began in 2022. Zelensky is expected to be in Washington, D.C. tomorrow. And Cracker Barrel CEO Julie Masino stepping down. She has faced an onslaught of criticism from customers, even President Trump, as she tried to modernize the restaurant chain's location, including that failed attempt to revamp the logo. Masino will be succeeded on his 10th by former Outback Steakhouse CEO David Dino. I can say it now. Blooming onions.
Maybe some Australian touches at Cracker Barrel. See how it goes. Contessa, thank you very much. Up next, your ETF manager, Don Chu. Don, what's coming up?
All right, so Mike, it's a big week for corporate earnings. Of course, big week for bond traders and investors as the Fed gets set for its next rate decision on Wednesday. With Middle East tensions back on the front burner and inflation worries persisting, we'll speak to a bond ETF manager on what should be in your playbook. That's coming up next.
SP Exports. Long date. SP Exports. Long date. BE pumps. Disc pumps. Disc pumps. Long dated.
Microsoft trying to change direction.
Apple pump. Long dated.
Welcome into the halftime report. I'm Don McShue with your ETF Edge. Bonds are back in focus with a hard-to-predict earnings season and an even harder-to-predict Fed decision this week. Joining me now is Christian Magoon, CEO of Amplify ETFs. The odds are saying we're going to hold pat, but there's a lot of debate around it, Christian. What exactly are the bond markets telling you right now about just where to be with regard to fixed income?
Yeah, it's really interesting. There's maybe about a 35% chance of a rate cut here coming up this week. Probably more likely next month. I think from an 80% chance the market is pricing in. We really think a couple of ways to look at this are maybe looking at bond ETFs that have covered calls baked into them. So you can actually implement a covered call strategy in the bond ETF. You have several ETFs that actually do this in treasuries, investment grade, as well as high yield. So you could own these bond ETFs like HYG, LQD, TLT, have an automatic option income writing strategy that boosts income and hedges against maybe some of the rate cutting uncertainty that could be coming down the pike here in the next month or so.
And Christian, just how rich are those option premiums right now that you can maybe want to capture some of the upside by selling some options activity and booking some of that income? Just how rich are they relative to where they have been?
Yeah, they're quite rich actually, given the volatility. So we're targeting on our TLTP ETF a 12% yield for that TLT options product, and then LQD and LQD targeting 12%. That's option income plus interest income. So some of these ETFs you get 2 to 3 times the underlying ETF yield by using this option income strategy along the way against this uncertainty. So fairly rich, I think, for income investors.
All right, and one last point before we let you go. Is there a specific part of that kind of rates or credit complex that seems the most attractive outside of some of these option strategies?
Well, overnight cash rate, the SOFR rate is quite attractive. Sit out all this drama. SOFR is hard to access unless you're an institution, but we have the only SOFR ETFs. SOFR is the ticker. 6%, not bad for an overnight duration play. You can sit out some of this drama.
All right, Christian Magoon and Amplify, thank you very much. We are going to continue this conversation over at etfedge.cnbc.com.
portfolio manager at Allspring Global Investments. We'll talk all things, or at least most things, credit and rates. Mike, I'll send things back over to you.
Mike, Don, thank you. Well, straight ahead, healthcare's recent run. The committee's ready to take the trade ahead of more big earnings on deck.
Microsoft trying to climb up. It's above VWAP. Looks like a doji spinning top on the daily. Snowflake turning back up. Snowflake back above VWAP. Shopify still number one on the NASDAQ 100. Shopify at the high of the day, followed by Workday, Thomson Reuters, Autodesk. All of these at the high of the day. Strategy.
Apple Pulse. Long dated.
DoorDash. Just off the high of the day. DoorDash. Baker Hughes was number one earlier this morning. It faded a bit, but turning back up on the gap up. Earnings. Baker Hughes beat by 14 cents. Revenue came in $234 million above expected. Estimate was for $6.5 billion. It came in at $6.74 billion. All right, Baker Hughes turning back up now. Not only in the energy sector, but also industrial. They produce turbine generators for producing power for these big data centers. Copart, CPRT, auctioneer, takes flooded and damaged vehicles, fixes them up and resells them to help recoup costs for insurance companies. Copart, CPRT. Intuitive Surgical, ISRG. These are all in the top 20 NASDAQ 100. Synopsys, SNPS, turning back up. Palantir, trying to get back above the 50-day. S&P trying to get back above the 50-day. S&P 500. Why does that keep happening?
Long dated. Long dated.
S&P 500 trying to get back above VWAP and the 50-day. 50-day is pretty far away. Adobe.
BTIG's John McCrinsky saying it's close to breaking a multi-year downtrend. All the chart readers kind of love it. It's been emerging and basing and anti-tech. I guess it's useful in that sense. Jason, put a storyline around some of it, maybe with biotech in particular. Obviously, deals have picked up. And the acquirers have
A downtrend? I see an uptrend.
So I think the major catalyst, obviously, for biotech is tax right? I mean, that's what's driving all the M&A. These big pharma companies have to stop gap some of these revenue streams that get lost from.
Where does Mike Santoli see a downtrend? I see an uptrend.
Micron Pulse.
They need to replace that revenue stream with the, with the biosimilars now.
Interesting.
Off the balance sheet. So for me, that's
S&P fading a bit now.
12% but that's been the story in kind of bio.
All right, the New York Fangs are just sitting here. Had a nice morning.
Which handles
New York FANG stocks, the index had a pretty decent morning. We're sitting here right near Thursday and Friday's lows, while the S&P equal weight is gathering a little steam. This looked like a graystone doji earlier, back above the 20 EMA. So it needs to get above 216. You can see the breakout zone, either above 216 or below 211. Below 211 bearish, above 216 bullish. On the equal weight index, let's look at SPY value. Been looking at the possibility of buying some SPY value, SPYV. As SPYG growth, we see selling.
That should have you allocating in the direction of healthcare, whether it's a Bristol Myers or a United or a United or a Merck, they're all working well. The GLP-1 story, Eli Lilly, the biotechs have worked really well. I think it's
Expedia Travel. Expedia Travel looking good.
whether it's drug discovery, whether it's robotics, diagnostics, whatever the case may be. And just if you think about the amount, the significant amount of trillions of dollars
Okay, looks like a Delta.
over the next 5 to 10 years, right?
SMH Pulse.
Uh-oh.
Shenanigans. SMH Pulse.
A lot of pulse alerts on SMH.
SMH Pulse. Shenanigans. SMH Pulse. Shenanigans.
Wow, there's a lot of SMH. Puts 100%, puts 100%. All these SMH pulse alerts are all put related. Puts.
To healthcare, but I don't know collectively if the investment community has accepted it and said, okay, we're moving to it. One name that's interesting in the private markets, and you see that, you have that visibility much better than I do. But look, if we could, can we show a chart of it too?
Intel trying to turn back up. Intel
That's like the definition of what AI should mean to healthcare.
in a downtrend, so any bounce is probably going to get shorted. We'll base at some point. Intel, if you're holding Intel, it'll probably base at some point. Right now it's just fading. Assume any bounce like we saw to start last week. We hit a high and then rolled over. I expect that kind of price action. If we bounce at all, say back to 100, look for that to roll over. Eventually, we're going to base out probably around the 200-day moving average down here, near 67.
Meta Pulse. Shenanigans. SPX Pulse.
S&P turning back up. Okay, healthcare looks okay. Let's look at sectors. Okay, pretty balanced right now. Consumer services up 1.7%. Energy down 1.5%. Consumer staples up 1.25%. Utilities down 1.1%. Materials, financials, healthcare, consumer discretionary, staples, and communication services, those are bullish today. Industrials are flat. Real estate down 0.3%. Okay, these look okay. They look okay. Industrials, financials. You can sense and feel the trepidation in the markets, the desire not to put any money to work, longer term money, until we get some sort of resolution, because we're up, we're down, we're up, we're down. What's Core 1M at right now? Core 1M is currently at 808. Okay, that's been trying to push above 8. all of last week, Core 1M. The disparity between single stock vol and index vol is narrowing as we push back above 8. That's telling you that calls are no longer super expensive, that people are no longer chasing like they were. People are probably just taking it easy right now. All right, so Brent's going to be on at 1. All right, let me join that. All right, so a lot of these stocks are moving to the left. They were on the right side of the screen. You can see the trails here all moving to the left. That's telling you calls are losing value. More or less. That's what it's telling you. Vol is, all right, vol is picking up on the VIX and moving lower on single stock options. All right, S&P moving lower now. S&P is moving lower. Okay, S&P 500 moving lower. Back to 7,400. Obviously, you can see a pretty big range here. S&P in a range.
Tesla Pulse, long dated, deep calls. Tesla Pulse, long dated, deep calls. AMD Pulse, long dated, deep calls.
All right, Netflix moving into this gap. Netflix.
AMD Pulse, long dated, deep calls. Spider Pulse, long dated.
Netflix moving into this gap. 73, 74, right in that area. We're going to start to run into some resistance. Volume is above average, except for the big spike in selling volume on the gap down after earnings. Volume is starting to pick up. Weekly, it's got a lot of work to do to get above the 10 EMA. 10 EMA needs to turn back up. S&P still moving lower. S&P still moving lower.
Zero DTE, calls. Size.
Rocket Labs trying to push back above VWAP. Rocket Labs. All right, S&P back below 7,400. There's negative gamma down here. Okay, negative gamma. There's a little positive gamma over here on the right. But below, as we started the day, a lot of negative gamma here. a lot of support. Some of this positive gamma should be supportive. Okay, net OI shows report at 7,400. We need to get back above 7,400. There's a little bit right here too. 73.85.
Q's pulse. Zero DTE. Colstrip. Size. Q's pulse. Long dated. NVIDIA pulse. Long dated. Deep calls.
S&P testing the lows again. Little descending channel. Intraday bearish on the daily. Below the 50-day moving average.
SP exports. Long dated. SP exports. Long dated.
On the daily, a larger range. We're in the middle of that larger range. We're just in the lower half of that larger range. Okay, let's see what we got here. We got a ascending support, maybe support.
Meta pulse.
Let's see what junk bonds look like. Pretty much everything is a headwind right now. So putting money to work. We did gap up a little bit this morning. Just kind of sitting here, junk bonds. There still feels like there's a lack of these investors that would normally buy junk bonds. They're risk averse, so this is literally a risk on, risk off instrument. They'll only buy junk bonds when they feel like the markets are going to trend higher. They're not going to buy or they lose interest if the markets are perceived to be weak and could plunge lower. So junk bonds are very inactive at the moment. You can see two dojis Thursday, Friday last week. We tried to get something going today. Just not enough. There's not enough interest. Okay, there's not enough interest in buying this right now. We can look at high yield corporate, which is a little bit better. Same look, high yield corporate. A risk on, risk off instrument. Now, the interesting thing is that the equal weight index, removing the weight of tech, did gap up. Yes, it's not a full candle. It is in the lower half of its range. Could pull right back in. Bollinger Bands are tightening up, which is telling you that volatility should pick up pretty soon. And we already see what VIX looks like. VIX, I have September 2025 call spreads, just in case we get some sort of spike. Okay. VIX. Let's see. Breath. All right. VIX is red. VIX is red. That tells us we got a headwind in VIX. NIMO. All of these are heading higher, and we're doing it. We're doing it with 314 stocks advancing, 60 on the Qs, 315 stocks on the S&P 500. Core 1M is almost at 9 now, 850, 860. So what does all of this mean? It means that we're neutral, slightly bearish, and there are some bullish aspects to this. So the bullish aspects are, what sector are you trading? Are you trading materials? Are you trading communications? What sector are you trading? Communications with a bounce. Energy, that's fading today. Financials, that's a big gap up. Industrials, no. Tech, no. Semiconductors, definitely no. Consumer staples, yes. Utilities, no. Healthcare, yes. Consumer discretionary, bounce. Retail, yes. Okay, so it depends on what sector you're trading. So if you're going to day trade, trying to stay focused in the sectors that are actually supportive gives you your best probabilities. Because if you're trying to trade technology against the trend, you're like a salmon swimming upstream, as Crimson Heart used to say. Right? You don't want to swim upstream like a salmon. You want to go with the flow. Communication services. Let's look at communication services. Let's see.
Nvidia Pulse, long dated.
Where is it? Where is it? Communication services, media agency. Let's see, which is the strongest? Mobile. Oh, yeah, that's right. We got Verizon, Vodafone. These are all moving higher. Okay, Verizon, that gapped up. Gapped up last week on, what was that, Wednesday? Dipped on Thursday. Bolted higher on Friday after earnings. Bollinger Bands opening up. Verizon looks good. AT&T, another one. AT&T. T-Mobile, not so much, right? T-Mobile's still below the 50, but AT&T looks good. I mean, that's pretty cheap, $24 stock. Maybe you buy some leaps. If you're a longer-term investor, maybe you buy some leaps June or July of next year. Buy the 24 strike call. Let's see what that goes for. AT&T, 24 strike call for next year. I'll look at 2027, June of 2027. Okay, so $2. You can get a 50 delta for $2.20 if you can get filled at the bid. $2.20 for a 25. You think we're going to get to 25? I do. There's about 7,000 in open interest, about 20 contracts so far. Looks like the 30 strike is the most active. That's a little far out of the money. That's probably somebody selling. That's probably selling premium. AT&T, I don't think we're going to get the 30. Well, maybe by next year. Maybe by next year. Okay, 30 is, I mean, even if you start to move towards 30, it is that's a 25 delta. I don't like the 25 deltas. I like the 50 deltas better. 50 delta, that is a 22 strike call that's in the money. That'll set you back $2.20. That's not much. That's not much. I might actually buy some of these. Let's see. Google, Home Depot, kids.
Q's Pulse, long dated. 0 DTE, put strip. SP exports. 0 DTE, call strip. 0 DTE, put strip. Size.
McDonald's.
Zero DTE puts. Size.
Okay, Elf Beauty is up, right? That was from a previous watch list. Elf. Okay, breaking out above. Elf breaking out. Previous watch list.
Zero DTE put strip.
Elf.
Better pulse. Long dated. Shenanigans. Micron pulse. Long dated. Zero DTE.
Okay, Elf Beauty from the previous watch list.
Zero DTE. Call strip.
That's bullish. Looking like it's going to keep going here. Elf Beauty. S&P continues to fade.
Zero DTE. Put strip. Zero DTE. Put strip. Size.
Okay, Elf Beauty looks good. Near the highs of the day. S&P is still in this descending channel. Elf Beauty. Okay, opening range high is right there. It's above the 200-day moving average.
Zero DTE.
Recording in progress.
Alrighty, what's up, everybody? Today is Monday, July 27th.
Zero DTE. Put strip.
Sorry for the delay here. I'm actually on vacation and I had a little problem getting back in time for the webinar. So I apologize for that. The only reason I bring that up is because doing this from vacation. So as I end late, I'm trying to make up for a little bit. But let me know it's a little abnormal day. But I was out last week, so we didn't want to go too long without doing the old webinar. So that is the current situation. Thank you for hanging out and waiting. I'll have my screen up here in a minute, and then we will be good to go. If you have any questions, pop in the Q&A now. I will do my best to answer those questions.
All right, Brent's on.
Zero DTE. Call strip.
So Pablo, good to see you. Hey, Banca and Jay Carbo, nice to see you guys as well.
Zero DTE. Put strip.
All right. So what we're getting here this morning, caught the founder's note this morning. It looked like we had a pretty solid positive bias to the market based on the fact that oil was coming down, and then, equities overnight or futures overnight were quite positive. As soon as the market opened, we just obviously had a pretty sharp sell-off here. And in the S&P 500, as you can see, we're down about 30 bips and about 1% in the NDX, right? So what this is telling us, or what this is sort of informing us, is you have that negative gamma in the S&P, or excuse me, in the NASDAQ. Now below 7450, we had negative gamma in the S&P, and so we want to check that. Obviously, before or below 7450 is kind of, you're in that risk off zone, right? I did this morning say, hey, I want to own some call flies in the Qs, and the reason I could talk through that I wanted to put that position on is because the volatility in the NASDAQ, since we have negative gamma to the upside, my thought with that was that as, or if the equity market started to rally, the S&P would hit 7450 kind of resistance, it would be sort of stuck, but that the NASDAQ could run up more. Now, what's interesting about this is oil has come down. You can see WTI here is still down 8%, but the index vol pumped sort of right back up, right? That sort of pushed immediately back up. The VIX was around 16 this morning, so it was reflecting some mildly lower volatility levels. But you can see obviously that it is now back above
And usually on Mondays, what happens, VIX is now back above Friday. Usually what happens on Fridays into Mondays is the VIX will and vol will contract a little into the weekend, into a normal weekend. And then after on Monday, that vol sorts of reflates a little bit. And then we call that the weekend effect. Now, in this case, the weekend effect is a little different because of the Iran situation. Now, what happened is it seems, like there's discussions around possible peace deal or not, and we're just sort of doing this ridiculous back and forth for about 3 months now, right? And kind of ultimately not going anywhere. So what we want to look at here today as we break into this thing is, what does gamma look like on the update? What does the volatility positioning look like into FOMC and key earnings that are come up, the MAG earnings? We want to check the reactions of earnings names over the last couple of days, like Google, Intel, right? Two big ones that reported last week. So, key information embedded in those prints, as well as Tesla, and that will help us set up what we see going forward. There's a bunch of macro issues now that we have to sort of wade through, right? Rates and oil being very linked to each other, but key to this whole situation. So if we break into here and we just take a look at Trace, you can see this negative gamma, right? And this morning at around 7:30, 8 o'clock when I was writing the note, this swath of negative gamma here is quite unusual or distinct from what we've seen over the last several weeks. Anyone who's been a subscriber reading the notes for the last couple of weeks know that the map has basically been blue or purple, right, for the entire 2-week period, I would say, roughly, right? And this morning we saw there was this band, and I highlighted this in the note, this band driven by this one specific strike, and that is a 0DT strike. And below that, what you're seeing is mainly dealer, and this is looking at the market makers, they're mainly short puts here, right? When the dealers are short puts, that's where the gamma risk tends to be invoked. And when you have this negative gamma, you tend to also have to relate that to Vega risk or Vanna risk. They all kind of blend together because if vol starts to increase, you have Vega, which is tied to longer dated positions, and then you could have Vanna, which is often tied to shorter dated positions. Vanna tells you that when the deltas change, right, when vol changes, implied vol goes up or down, that changes the delta hedging that has to take place. And then separately, you have Vega, which is larger for sort of 1, 2, 3, 6-month contracts out in time. And if VIX goes up, right, and dealers are short puts, particularly short puts that have 2, 3, 4, 5, 6-month tenors, there's a Vega component that has to be hedged as well. So that's where you start to invoke more pressure. So this is, that negative gamma positioning, right? It's a lot of different terms here. I'm clearly screwing some of them up. There's your negative gamma positioning. And when you play the day forward, what you start to see is that positioning is still really there. You get a little more blue now to the bottom. Why do you get blue now to the bottom? Why does this start to break up? Because the positions start to roll, right? So you remember at the start of the day, we had a much bigger position higher, this position, right? And now the bigger position is the one kind of that we're wrestling with right now. This is the 73.85. That's right where the market is. And so when I'm looking at this map right now, and you're looking at the way the S&P is trading, you see this is a big 99th percentile strike, right? We're gonna check the size in a second. And the market roughly seems to be bouncing off of that level. I mean, it's very clear. Sometimes we look at these levels and it's like, it bounced off 7,400. Is that related to options? Well, it's a big round number, but 73.85, there's no other reason for the market to be bouncing off of that level. As I've said in the past, it needs to be at least 5,000 contracts for it to be a big position. And in this case, you have 9,000 contracts. So this is a material strike. It's a material spread. It's a put spread, as you can see here. And so I think that there's a good chance that this stays in place or the market revolves around this strike for the rest of the day. So I would like to treat this as support, okay? At 9,000 lot, it's fairly large. And those of you who know what seek and destroy is, if you don't, if you go to YouTube and you Google seek and destroy, if you're in Discord and you look in the Discord support bot and you ask about seek and destroy, you get a video about this. But basically what it is the market will find the big strikes, and then Hero will drive the market into those strikes. So in this case here, so it seeks out the big level, 9K, 10K, very big level. And then once you tag that level, you should see Hero plane off. And if Hero planes off or flattens out, right, it's like, okay, the job is done. We're good. And now I would expect the market to bounce or hold this level. So in this case, I would think more about selling a put spread as opposed to think the market would bounce here, right? Now you have to dig into your risk and see if it's worth it, et cetera, et cetera. But that's sort of the idea. What would be the signal to me that seek and destroy may not work? If Hero continues to do one of these, right, and go south. And it's a material risk at the moment because this is all negative gamma, right? So if Hero, which is bearish, you do have to worry about that risk, right? But if Hero's kind of playing it out here at this big strike, I think selling put spreads around here, zero DTE style, like, okay, I don't mind that. How do we measure Hero in this case? Let's take a look at it. So if we go into Hero on the screens here, you can see off of the first 74.85 touch that Hero for the S&P 500 has bounced pretty strongly from that level, right? We're positive on the day. This is not the kind of stuff that you would see if we all had to kind of duck for cover, right? So that kind of backs up the idea that maybe selling puts under this level is okay. Also, this is where I like using the moving averages for Hero. So in this case, if you hit functions in here, I have an EMA on Hero, I believe it's a 10-minute and a 30-minute, and that produces these two lines, the blue and the red. This is part of the features that we just rolled out about 2 weeks ago. And the reason I like to bring this up here is because before I was saying, look, if Hero starts to go down, that's the sign that I don't want to be short puts anymore, or I don't want to be long the market, right? And so how do you know that Hero has turned? How do you know that has shifted from a bearish sell-off to, or a bearish flows to bullish? Well, using this moving average cross is a pretty objective way of declaring that, right? Otherwise, you're sort of eyeballing it. I don't know. So at the moment for the S&P, if these moving averages, the red and the blue, if they kind of cross back over, then I'm gonna be kind of worried about my short put spread that I put on. Does that make sense? And the Hero before in Trace, I was looking at the S&P equities. So if we could just go back here real quick and you see, okay, your Hero here is quite negative, Brent. Not super negative at 2 billion, but what that one was is the equity indicator, which is here. You can see that has been in a strong downtrend for most of the day. At 2 billion, it can be as negative as 5. So, you know, that single stock component is negative, and we definitely want to keep an eye on that. That certainly doesn't give the impression that it's about to turn around on the day. So maybe that's more the indicator we want to see turn around a little bit. But I'm actively looking for this to be support. Last but certainly not least is the NASDAQ. The NASDAQ flow was quite negative, as you can see here up to start out the day. We got to about negative 2 billion, but it's sort of shifted more neutral, I would say, at the moment. So let's just summarize all this again. 73.85 is a giant zero DTE level. We've moved down to that level in a little bit of seek and destroy format. I think that the trade here, if anything, would be wanting to sell put spreads, short dated put spreads at or below these key strikes, so kind of 73.80 and below. If Hero continues to go south in the S&P equities or in the NASDAQ, certainly also in the S&P 500, those values continue to go lower. I'm going to be kind of concerned about that put spread. But that's the indicator I'm watching, right, to say that we're going to hold at these kind of levels. So the way that I would look at this right now is, okay, you know, we're turning a little bit south here. Maybe this is a little bit of a new trend, so maybe not yet. You want to kind of sell, particularly with the equities being this negative. But if these start to plane out, we hit that 73.80 level in the S&P, and I could sell like a 73.70, 73.65, maybe 10 handle wide put spread or something like that. That's the kind of thing I'm going to be looking at playing. And this is more of a pin idea as opposed to a looking for a big market bounce. And so it's a little bit different. Another strategy here may be saying, let me sell a condor around those strikes, and I'll just roll the dice here and see how that goes, with the idea that we're going to pin the big zero DT position, because that's a pretty big position. And so that's the rough idea of what is in play for right here, right now. Check the Q&A in the chat right now to make sure that works. 10 and 30 is what I went with, Victor and DS. I'll be honest with you, I've tried different flavors. I have not back tested sort of which one is the best. This is also listed in the candle size that you use. So based on the candle size that I have 120 versus 360. And that's because I like to watch the shorter duration candle, the 30-second duration candle. So that's what I went with. You may want to open that up, close that aperture a little bit, you know, shift that around. These tools are fairly new. In other words, we've only had the EMAs on here for a couple of months, you know, at most. You've not even had it for that long. So that's the kind of thing. I also just defaulted to using EMA. I'm not super well versed in technical analysis and what may be best. We're also running the technical analysis. In this case, I'm using it on the hero indicator itself. So we want to play with that like a little bit. I'm not saying that there's a should. But what I really wanted was a solid idea of saying, okay, the flow has shifted because these two, fairly short duration EMAs or SMAs have crossed each other. And that I just can objectively say, okay, 10-minute has crossed 30-minute. This is bearish flow. I need to cover this put spread. Or, okay, 10-minute has gone above 30-minute on equities right here. I'm gonna use that to say we're probably done. Now I can sell my put spread. Fair enough? So tomorrow, we'll talk about tomorrow in a second here. So John has two questions here, one related to this current topic. He started buying a small position at 73.90 and he planned to add more if we continue to decline. At the moment, it's an observational position. Today we have support at 73.85 because of the zero DT position. And so when I look at the way that the NASDAQ and the S&P traded, it was a pretty nasty open and we just sort of slid down. But right now, it doesn't feel like we've hit sort of the escape button. Meaning we sort of just mean reverted is kind of what this feels like, right? Back to yesterday's or Friday's levels. And you can make a case that the 73.85 is kind of a seek and destroy positioning, as opposed to seeing materially negative downward momentum, right? The thing about this that is a little bit weird is that we now have negative gamma below. We got to check if that exists out in time. We'll talk about that in a second. There's negative gamma all over the NASDAQ, which means volatility should continue to sort of persist. And so when I'm thinking about, do I want to buy stocks right here? The answer to that question is no. I suggested in the morning note to buy a 0 DTE call or a 1 DTE call fly. That's for tomorrow in the NASDAQ. Why did I decide to do that? Number one is because I saw resistance above at 7,500 in the S&P. So we just go back and look at this. This negative gamma positioning is still there, right? And you can see it. It has changed a little bit from this morning, but you can see up here is that resistance that I saw, not only for today, but I was thinking about this into tomorrow because I didn't think the position would change a lot into FOMC and NASDAQ, and Apple, not Apple, Meta and Microsoft earnings on Wednesday. That's the first catalyst. Then Apple and, drawing a blank, Amazon, I know it's double A's, on Tuesday, along with CPE, et cetera. So I don't want to get back into stocks until I see a relative level of stability. Now, the idea this morning was things look bullish, and the NASDAQ, because it had negative gamma, there's no real resistance in that index, which is why I wanted to go into a call fly for tomorrow. Vol is also fairly elevated right now, so that's why I also wanted to go call fly so I could reduce that cost. Just in case it's completely wrong, as right now, you have to objectively say the idea that we would bounce in tomorrow is objectively wrong. So I limit my risk by saying I'm going with the cheap call fly here, and this is not me staking a flag in the ground saying I want to buy this dip into another week or 2 weeks or 3 weeks out because there's so much value right here in front of these macro catalysts. And hopefully that makes sense, right? So look, I'm wrong. I lost 70 cents on my call flies this morning and no big deal. Maybe we still bounce and rally into tomorrow. I don't know. I wrote the cost of those positions off. Now, you saying you want to buy at 73.90, I don't know what your reason is for that. They could be valid, but why don't I like buying that position? Number one, we're in this negative gamma positioning, right? If you want to day trade off of this level, okay. But as far as holding it in tomorrow or overnight, I have zero edge there, right? So that's why I don't, I have no catalyst to want to buy at this moment, at this time, right? If you're talking about scalping off of a level, okay. But really, ultimately, what the long thesis is at this point, with this weakness is you need the positive catalyst to bring vol down and to regenerate or reignite some bullish activity in the market. Well, you need to clear the Fed for that to really happen, in my opinion. So we thought we'd get a, or I thought we'd get more of a bid off this oil coming down. Doesn't appear to be happening. Oil still looks like it's down, and obviously we just sort of retraced here. So That to me is kind of a problem. Again, the zero DT or one DT call fly rather, clear defined risk, small I trade, good risk, good reward. Because it looked like we were bidding, we're gonna rally up, that thesis clearly fell apart. What is the trade that I would maybe take right now? Playing for a pin around these very big strikes. That's not necessarily bullish or bearish, that's saying there's a huge strike here, there's a giant position, we tend to pin to these positions. It looks like the deltas are sort of flattening out, meaning hero's kind of flattening out. So I have a constructive reason to want to play us not moving far off of this particular downside, that type of pin level, which is why I'm willing to play a zero DT position. Not a one DT position, not a, hey, I want to buy this dip for perpetuity or anything else. There's a reason to make a short dated trade. And the reason I think I have edge in that position is because there's a very large 10,000 lot at each strike. That's pretty big from my experience. And you can see 99th percentile strikes. So that's why I'm interested in that. Now, if we look at, zoom out a little bit in time, when we look at the positioning here, this is totally different than what we've seen, right, in the last several weeks. This is a negative bearish positioning. And so I generally want to own stocks when I think the stocks are going to be stable, which is why the risk pivot is sitting right here. And that risk pivot has been doing a good job of resistance. If you look at the overnight futures, like we kind of like just cascaded above that a little bit. You know, we tested that 74.80 area roughly, and now we're drifting back down. What is this telling me? This tells me that downside volatility could be big if we sort of get a bad Fed reading, bad back sevens, high course PCE, you know, whatever it may be, right? Iran situation goes the other way suddenly. And then to the upside, you know, look, it's this blue area that reduces a little bit or starts to lift post FOMC. If the FOMC is dovish for some reason, then, you know, obviously these levels are going to change a little bit, but based on what I can see right now, I don't want to own S&P when this is the projection. Why? Because if we get a negative catalyst, that might be where that downside convexity that we have not seen in the S&P, that might be where that finally starts to pick up. Hopefully that makes sense. This is a risky downside position. So I'm really not interested other than a short today trade at the moment, right? It's clearly wrong in the call flies. What's the reason for me wanting to establish a bullish position here for tomorrow? I don't really have a great one. Post FOMC, you want to play vol contraction and maybe things start to rally a little bit. I'm like, okay, but we could be down 100 handles from then. And so if I put a call fly on now for post FOMC, I might be way off. So that's why I'm sort of kind of sitting on my hands, ultimately, is what this is for some idea of FOMC or later. Now, Core 1M, these other volatility metrics. I'd be curious with this, and you know, let me know in the chat or whatever, but when you look at Core 1M, it's been at a very low level, right? Let me handle the gold position real quick. I almost wrote about this in the morning note, but I decided not to because it takes me into macro land a little bit, and so I'm trying to avoid that. This has a little bit of a macro take to it, so feel free to stick your fingers in your ear right now. But look, the debt and the spending and all the bullshit is going crazy, right? And so, you know, there's no, yes, the rates may go higher a little bit here, et cetera, et cetera, et cetera, but you know, and the reason I bring this up is because you have that as a tailwind, then you say, well, gold's been acting like crap, even though we've had these wars and everything else. So I don't know, you know, the macro piece, I got to put that out a little bit. So don't, you know, throw your shoe at the screen on this. But when I look at gold, I see put skew at 88th percentile, call skew at 9th percentile. Nobody wants to get long gold. Generally speaking, I like to play mean reversion and stuff, as many of you know. And so with Bitcoin, for example, we saw this, that risk reversal actually ended up generating a pretty decent return. That was a couple months ago. I like the idea of selling gold puts to buy gold calls here. Gold can't go to zero. It can certainly go lower. So you have to, you know, update your own risk profile, et cetera, et cetera, et cetera, all the other disclosures. But you're talking about 3 to 6 month out, selling some gold puts to buying some gold calls, because I think that this puts 2 percentile reflects negatively out in time as well. I like that idea. You know, now, if we raise rates and gold goes lower, all those macro pieces aside, I don't know. If you can wade through that, you know, good kind of luck. But look, in the short term, gold could go lower. In the long term, when you look at how much we're spending everywhere and just the inflation everywhere and everything else, I mean, I don't know how we lose a script with gold. So that's kind of my feeling on that. But again, I'm not a macro guy, so that's kind of my feeling. Yeah, and it found decent support at gold itself at 400 and GLD kind of in this area. You know, this is quite a negative position. So in the short term, you know, could this be a little bit of bounce? That's true. There's people that say gold's getting sold because they got to sell gold to buy oil by the central banks. Like, I don't even know how to parse through all that. But, you know, I would just sort of not worry about it. That's how I feel as someone that holds gold as well. And exactly, gold is so tied to rates, which is the point. If they want to raise rates, that's probably not great for gold. But I think we all know with the spending and everything else, that ultimately there's only one direction for this train over time. Okay, Core 1M and the volatility complex. Our good friend here, Dr. Cos, puts a note into that, and I saw Core 1M obviously 8.6. So the question from Dr. Cos was, how do I work Core 1M and VSPX into my overall market structure impression over the course of the week, and what I consider the large attractive strikes may lie? So I think that's a great question. And the way that we frame this, right, is when we were looking at, and this has been a very strange couple of weeks. And so I'll just talk about why I feel like that's been strange. DSPX, which is the SIBO dispersion index, and if we just go and look at that, that is at it wasn't an all-time high. I didn't look at it today, so let's look at that together. You zoom out on this thing, and you know, it's higher than it's ever been, right? Well, I guess not quite. 2020, we had this spike. What is this telling us? The implied vols of the constituents of the S&P 500, so I think it's the top 50 for the DSPX, they're all over the place, right? Usually this happens when a market is crashing. S&P is not crashing, NASDAQ, certainly under pressure, DRAM, these other names, crashy, yes. Like, we're sort of all over the place. If you hold DRAM or last 2 weeks, or the semi stocks, or it, like, you're pissed. If you hold S&P, you're like, what are you talking about, right? And that's what's been interesting to me about this over the last couple of weeks, is because I view that Core 1M as such a great risk indicator, and that tends to have me want to drive to buy S&P 500 puts. And when you do a simple back test, when the Core 1M goes under 8, we tend to have a 3 to 5% sell-off within the next 20 days. Now, as somebody who is advising people or suggesting that we're going to have market weakness, if you're short the NASDAQ, you're like, this was awesome. If you're short the S&P, you're kind of like Brent, you know, I don't know. You kind of helped me, you kind of didn't. You know, it's a little bit shades of gray there, right? It wasn't this clear-cut, high correlation, bam, we're down, all stocks get sold off, you know, we're crashing, right? It's not super clean. Now, Core 1M is starting to lift back up. As you can see here, we're now back above this 8 level. So then you go, well, Brent, if your risk off level is sub 8, you know, is the selling done? And the answer to that question is simply, what does the Fed do? And do we stay below the risk pivot? The risk pivot is 73.80, so that's the level that I care about right now. That's what I care about. Why do I care about that risk pivot? Because I want to see the stability come back in the market. The stability is positive gamma. Why do I care about that? Because I want to know if I'm sleeping and the market starts to sell off, that I believe there's some force that will start to bid me back up, so I don't have to sit here and babysit a position. If there's negative gamma below, and we start to get a catalyst that pushes the market down, we can have a nasty spill off there, right? So what does this mean to me? Core 1M bouncing back up at this moment is kind of the response to things being a little bit of a mess. It's not that the risk has come off, Core 1M is actually starting to respond to, in a way, to things starting to crash a little bit. Now, what do I mean by that? Well, if you look at the VIX, right, and you look at Core 1M together, they tend to rise and drop together. So you compare these two, and I know they're both blue because, I make my life difficult over here. But this is what I'm talking about. These two things tend to spike together. Now, if the Fed tomorrow, or Wednesday rather, is like, we're screwed and we're gonna raise rates, or the Iran situation goes from peace talks to whatever it is back again, hopefully that doesn't happen, then this could get nasty. Now, I've been saying it could get nasty for, I don't know, a month. Like, I'm kind of sick of talking about it, but the conditions just don't change. So I don't want to sit there and own equities like as my core holding when the positioning that I see is garbage. And that's the problem. Now, what I can say about this and what I do feel good about is if you own stocks over the last 2 weeks or 3 weeks or whatever it is now, since we started complaining about Core 1M being under 8, you didn't miss out on any gains. That's for sure. Now, if you're like, well, I bought, I don't know, Dell and it went up 10%, Brent. Well, I'm not talking about that. I'm talking about the index, right? Because the performance has not been that good. So whether we are just kind of like, we just had the appetizer, the moose boosh or whatever you like to call it, right? Like cleanse the palate and we get served up a much more bearish move tomorrow or Wednesday again. That's the macro Iran rates, I think, decision. We're going to toss on, obviously Apple and Amazon earnings. So we're going to get a big update there. And the way that I'm navigating this is very simple. In my opinion, it's very simple. If we get back above the risk pivot, which is 73.80, which is essentially right here, then we're going to reclaim positive gamma, which means that I believe we have some support in the market, and I want to get long equities in that position. Why? Because if we have some support in the market, vol should come down. As vol comes down, that is a tailwind for equities. So we get positive gamma, vol comes down, it contracts, equities get lifted up, and that's the cycle. That makes sense to everybody? Hopefully that answers the questions. For below that risk pivot, no thank you. And we see huge put positions in an OPEX, into August OPEX or whatever, and it's just like this carpet bomb, terrible scenario. Well, maybe with the rolling off of OPEX, I'm going to say, hey, I want to start getting along some equity calls here because we may have put in some kind of a big bottom. That's not it right now, right? We're just not there. Another scenario could be we drift down to 7,300 by FOMC, and this whole part of the map becomes blue or purple, right? Whatever your shade of, I don't know what you call that shade is, shade of blue, some shade of blue and red. Then maybe we say, well, we're going to downgrade the risk pivot to 73.50 because the map from here up is all blue. Does that make sense? So I will adjust the risk pivot, but 74.80 as the risk pivot. And if I keep saying 73.80, I'm sorry. The risk pivot is 74.80. If positive gamma fills in somewhere else, and I feel like there's stability, I will move the risk pivot down. Apologies if I'm saying the wrong thing. The risk pivot actually downgraded. Sorry, I moved it to 74.50 today. This is the zone, right? 74.80, 74.50. That's the rough area. Okay. So if FOMC, like, great, we're happy with FOMC's statement. We close up above 74.50, 74.80, somewhere in that zone on Wednesday night. Okay, great. I feel good about owning equities. Let's let it go. Fed spooks us. We move lower. I don't have any interest in buying that dip until I see some kind of form of support. Form of support is non-zero GDE positive gamma. I want to see people selling puts, buying calls, right? That kind of stuff. And when you look at the map right now, there's no zone of positive gamma out in time. It just doesn't exist. So I zoomed out to the 31st. There's no positive gamma on this map right now. So where do I want to buy? Where would I think about buying based on the map right now? Let's look at the S&P equity X curve. That's like 7,000. I'm looking at where does this kind of bottom out and trough. So 7,000, if nothing else changes, then I'm interested in maybe looking at buying some calls, call structures, expressing, okay, no more downside in the market, because this is where that planes out. Does that make sense? This could change a lot into Wednesday as well, so, but that's the map. And so, when you're sitting here and you're saying, well, Brent is saying the market could go up or the market could go down, I don't know how the Fed's gonna react, but what am I waiting for as a trader? I wanna see the area where I'm interested in buying stocks. It's not all the way down until 7,000, or if we have some stability above 74.50 and that positive gamma comes in, great, then I'll get long stocks again. I also don't wanna sit here short the market unless I have a catalyst. So if the Fed says you guys are screwed, I think we have, based on this map, 2, 3, 4% of downside. Okay, great. Fed says we could go down, we start to go down, we have negative gamma below, vol starts to lift, then I have a catalyst to believe the market's gonna continue to go lower, so let's ride that catalyst. And that's that, right? It's if-then scenarios. It's not, I don't have a reason to want to necessarily position before these two things. Maybe into FOMC, we could set up some good risk reward trades for either side, but as of right now, it's like, I kind of just gotta sit on my hands, right? If you want to see the zoomed out view, you just go into the calendar up here and choosing a forward date. That's it. And thank you, Dave, for that reply. So those are the attractive strikes. 7,000, 74.50, that's where I want to sort of structure. I still have on this QQQ call fly for tomorrow, which is basically worth nothing at this point. Is what it is. Defined risk, I think it was 70 cents for $10 wide call fly, and at the moment looks like I'm gonna take a big old zero on that one. But those are the two key strikes. LSJ, if you want to look at the key levels, you can bring this up. You can have your own list, and then you could export that list if you want. So that would be kind of one way to parse through that. I hope I answered that question. Hero is delayed by nanoseconds or milliseconds. Let's say milliseconds. As soon as a print takes place, Hero takes that in. Trace is delayed by 1 minute, sometimes a little bit longer today. You go 2 minutes, but that's it. Ken, hello. The pre-market positions and gamma levels, they're derived from, well, it depends on where you're looking. If you go into market overview, these levels are derived from open interest, called these naive levels. They're still important because they're big open interest levels and they're derived around 3 in the morning. The trace is updated in real time, so those levels are 1 minute delayed. Implied vols, like here, real time, 15-second delay, I believe. So trace starts at 2 in the morning and goes continuous. So if there's a trade, trace will pick it up and you go, same thing with Hero. So if it trades, it's reflected in Hero and in trace. So any level in here is going to be reflected immediately based on the data that we're picking in from the CBO. These levels are changing once a day, the levels in the dashboard. So I hope that is helpful. Chuck is saying, doesn't seek and destroy mean that the level is reduced? No. We don't see that oftentimes closed. The seek and destroy position doesn't oftentimes close. Now, if you're watching S&P Hero, because we know these are SPX contracts, so I'll bring up S&P Hero. If you see S&P Hero, which is the blue line here, jump real quickly, that's going to be the first indication that the position was closed. Now, if the position is closed, I don't want to play for that pin anymore. I don't have any reason to. So as long as we're above, 10,000 contracts or 5,000 contracts rather, excuse me, on the net OI for 0 DTE, then I feel okay about, let me zoom down a little too far here. I want to look at net OI. So it has closed a little bit. You can see we went from about 9,000, 9,600 a minute ago. So we've lost about 600 contracts. So small closers there. If that starts to get down into 5,000 lot or less, then I'm not gonna play for a pin anymore. I just gotta say crap and close it off, right? Your first indication is gonna be a big jump in hero. But this is updated every minute, so you're gonna wait a minute and you're gonna see that kind of close. So what does this mean again? Since we've been talking, that's been tested and held. If you're sitting there short puts or betting that we kind of pin that level, I think it's a decent trade because that position's there. I like that idea. If the position's closed, then I don't know that I want to hold my risk anymore. So in this case, we want to play for a pin. So the question that is being asked from Rajiv is, what do you think about the charm? The charm's going to be brightest right here. So you see where these two charm levels are meeting, right? This indicates some buying pressure. This indicates some selling pressure. So the idea here is that as this position in particular is decaying, you're seeing the charm is kind of heaviest at those two levels. And so you would think based on charm, we kind of drift back up into the 7,400 level because the decaying of position is buying delta, it's positive delta for the market makers. So again, being short puts under this big position makes sense based on that being essentially a support level. Now in charm, could you say, well, let's buy a $10 wide call fly to bet that we pin 7,400 or above in that level? Okay, I don't mind that as well. If you think this is going to be supportive when we kind of lift up a little bit. But to me, the kind of clearest expression is I want to be short contracts below these strikes because I'm thinking we kind of like pin or stick at those levels. Now, what does delta pressure show us? Purely buying and selling. So in this case, the way the market maker position is lined up, you have selling above, selling below, and a light shade of blue in here as well, right? So the delta pressure is suggesting there's a light, modest, very light, supportive position in here, sandwiched between two selling positions. How does that sync up with gamma? Well, it's kind of the same thing, right? Positive gamma in here says you do have some buying pressure in this zone, or positive gamma means we're going to buy a little here, sell a little here, so we're kind of pinning, right? That's what this is telling us. And this is a zero DT phenomenon because of this big position. So all of this lines up to say the clearest expression is selling put spreads kind of below, to me, is what I like the best. If hero starts to go up 2, 3, 4 billion, could you really start to rally up over this? You definitely could. So maybe you want to buy a wide call fly in that situation for real cheap, thinking about that, right? But that's not, that's not the clearest expression to me of what the positioning is. The clearest expression to me of what the positioning is that we would pin at or below this level. So that's why I'm thinking selling put spreads below there as opposed to some other type of trade. And if you're saying how big is the position, Brent? Well, the percentiles are right there. And that's based on the last, I believe, 90 days is what I have set up here, 30 days. So if you want to go longer on the look back, you can do that. And now you can see how these percentile positions are panning out. So that's how you know how big 6, 7, 8, 9, 10 billion is. We give you the percentage data right there. John, appreciate the kind words there. Dude, you're happy? The dude abides. Yes, so anonymous attendees asking a great question. I lean on the S&P equity basket a little bit more lately than I have in the past, and that is true. And the reason is because we've seen these instances recently. Like things have been very discombobulated lately. I'll call it since March, in April when we had the tech rally, right? Where I would normally look only at the S&P basket, and that would, generally speaking, set the tone.
We're listening to Brent over at Spot Gamma. Brent Kuchabar over at Spot Gamma has the mic. Just listening in.
Positive. Okay. Market fairly well supported. Clearly off of 73.90-ish, right in this zone. The zero DTE people started to buy the dip. $2 billion is what the number is. What about the S&P equities? Minus $2 billion. Oh shit. Well, if you have $2 billion, you take $2 billion away, you end up with nothing, right? And then what about the NASDAQ? Minus 1.5 billion. So when you look at this holistically, and you sum those numbers up, it's like, well, kind of negative, right? Now, what's the caveat? Suppose, if you think about the caveat of this, since 12 o'clock, NASDAQ's essentially flat, okay? All right. Since 12 o'clock, S&P equity basket, a little bit negative to flat, right? S&P basket, a little bit big. So if NASDAQ and equities are not really going to do something, but you see S&P 500 go to 2, 3, 4, 5 billion plus, well, that's bullish flow going into the market, right? Now, why is this different from other times? Because those other baskets haven't been that big. It's like flows have been pushing into single stocks and NASDAQ more so than S&P. Now, think about the dispersion index being at all-time highs. What is that telling you? Well, the single stock vols are really high. There's a lot of flow and activity in those names. Think about the difference between the NASDAQ implied vols and that complex, which have normalized some, but they were so different a month ago, writing articles about the NASDAQ volatility and stuff. More flows kind of pushing in the NASDAQ now, right? So this is a dynamic situation. My feeling is that if we had a big vol spike where VIX goes to 50, that the vols kind of go back to the normalized relationships, the single stock vols kind of go back in their holes a little bit, we kind of resync, and maybe the relationships that we've relied on broadly since, kind of almost since 2020, they start to sort of resync. Now, there's a little bit of a feeling like this time is different, and that's why I wrote that NASDAQ article, because like you're adding SpaceX and Anthropic and these other names, and they're getting such big tech outperformance, and AI is the savior trade. It's like, okay, we do have to keep an eye on this maybe being more of a permanent trend. Like maybe I have to have a NASDAQ hero because it means more. The NASDAQ volumes, NDX contract volumes actually gone down a little bit. So, look, like no relationship stays stable on a long enough horizon. So, we need to stay dynamic in our short term, saying we need to respect these short term differences.
Microsoft on the move.
NASDAQ, equity basket, NASDAQ versus S&P 100. I want to monitor all that sort of stuff in case, like, okay, vol spike, things go back to normal. But, that ultimately that's why I'm here, right? Because most of you know how to look at these relationships, particularly some of you have been around for a while. In my role as the analyst, say something funky is going on over here. What do we think it means? What's the risk reward, et cetera, right? And we need to update our tools or change our tools or look at things differently, or here's the idiosyncratic risk that maybe some of you aren't seeing. And that's just a function of maybe experience. So Zoom user, I think that may have answered your question as well. Dave, looking at S&P airfare, seems like we take a large to get a push up, but a small amount of fear to get downside leads. That's a key thing, right? I think that how does the market respond to positive flow versus negative flow? And we've called this in the past Volcini, because he's one that pointed out as an equity trader or futures trader, if you see the S&P right here is not doing anything, let's say that this goes up 3 or 4 billion, and you're like, hey, Brent, S&P is not moving despite getting $3 billion of order flow in 5 minutes. Well, what scares me then, if it reverts and goes down, then you probably get the equity index to go down. So the fact that the S&P doesn't respond to the upside, if you get a big enough hero influx, may mean that you got to watch out to the downside, right? Because you're not getting that response. Now, what's a lot? At least $1 billion over 15 minutes. That's what I need to see to consider to be a lot. In these markets, getting 2, 3, 4 billion in 10 minutes can happen. Like, look at this, right? Here's the 2 billion. This is a great example, right? We're starting to lift now. And so I would expect we would see a response in the equity market. We don't get that, you're like, well, what's going on? You can see it's starting to manifest a little bit here, right? But look at, this move right here. Oh, from 11:45, you got a flow alert to, about 12:30, so about 45 minutes. We went from arguably zero, a little over zero, up to $4 billion. Pretty in a decent, move up there in the equity market. What about a put fly into 7250? I don't mind that. I think right now, here's the problem with the put fly, Dealey, and I don't mind it because if you slide it down and it's out of the money position, I don't mind that downside position, but I don't have a strong reason for wanting to put it on at this moment. I think if your idea is that the Fed could spark some downside, then I would wait until 12:30 or 1 o'clock on Wednesday, just before the FOMC, and then I'll put on some kind of wide put fly in case he scoops the market. Because right now you have path dependency, right? We could sell off 100 points and then rally 200 points for FOMC, or do some other kind of version of that, right? And so, that is that. The put walls have not moved. That's a key indication, right? When put walls aren't shifting around, walls rolling up is bullish, walls going down, I generally say that's bearish, right? And so if you go to the index page and you go to the historical, I think it's on the volatility tab here. You look at the historical chart, you can download these levels, right? And you can play with these relationships yourself. But you know, here are all the levels and you can see how they adjust over time. So put wall not going down, generally speaking, I think that's stable, you know, I don't know if you want to say bullish, but that's good. Levels going down, call wall and put wall coming down are generally considered to be bearish. So, and on this point, it's like, okay, we gave up those strong 1% rally, but you don't want to say at 20 bips down that this is a particularly bearish day. It certainly doesn't feel good, you know, at big mean reversion, but I don't know. It's like, I can't panic over this. This is not a day I want to buy puts. Like, I'm sitting on my hands. And sitting on my hands is different from saying, hey, let's load up on puts. Like, the time for loading up on puts when core one was at 4. And largely puts have paid. Even if you own them in only the S&P, they've done okay, right? And I'd be curious, you know, look, tell me, like, with Core 1M going under 4 and the amount of times I complained about that over the last 2 weeks, if you're like, hey, it helped me, great. If you're like, no, it just sort of missed the boat, now is your opportunity to say as much in the chat. Scott, using Trace, the Trace user guide is from 2024, you know, that is aged. If you go to the Sharpen Your Skills sessions, we did a Sharpen Your Skills of Trace that is newer. So that is under, there's a direct link, and I always miss the link. You can look under webinar replays here and then say Sharpen Your Skills Trace. Also, if you're in Discord, you can ask the AI bot for the Sharpen Your Skills Trace, and it should give you that video. Jay, I'm not surprised it helped you. Sometimes I think you're just being nice to me. How do you know we're in a mean reversion environment? Ask Howard. This map is blue. You have positive gamma. And that's it. That's how I gauge it. So if you look at Trace and you see this is a blue map, you know, this whole thing is blue or purple. We have arguments about what color that is, but if this is blue, if you're up here, for example, that's positive gamma, right? If you're down here, it suggests the market should be bid for today, right? But we're in red, negative gamma. So again, when you zoom out here, very clear. Up here, 76.55, positive gamma, mean reverting market, stable. Great, I can sleep soundly at night. Down here, volatility is gonna whip all over. Trump tweets, it matters more, right? All that kind of stuff. Rajiv, you did it great. Love to hear that was helpful. Mark, is there any significance to the negative gamma closing behind the price in the positive? Not entirely sure what you're asking there, Mark. Is there any significance to the negative gamma closing in behind? Look, if you close in this area, it's just unstable. What does unstable mean? It means volatility. And look, I don't want to be short necessarily because I don't have a great catalyst at this point. And if we didn't have the Fed coming up and we were kind of below the risk pivot, then I would be like, you know, all right, let's try to short this thing. I don't know which way the Fed is going to go. I think on Tuesday, what we likely try to do is set up some put flies or put spreads, some kind of cheap way to get downside exposure and maybe some way to get cheap upside exposure. What I can lean on is this being a resistance area in the short term. So if I want to put a call fly on, let's say tomorrow is Fed day, right? And you go, okay, it's 74.65 to 74.70. I can structure a call fly there. So if he gives us bullish vibes and market rallies, great. I think I can target that area using that upside as resistance. And because the VIX is at 19, that's telling me, roughly speaking, options are expensive. That's a problem. Now, what about to the downside? If I think 7,000 is a troughing area potentially, I can structure put flies there, stagger them 3 days out in time, probably get those for pretty cheap. So we do have just this really nasty reaction. I'll make a bit of money if the market starts to go down. The last thing in the world I want to do is just own an outright put into Fed when I have no, you may have a view on Fed and say the Fed is fucked. The Fed is screwed. He's in a bind. Has to be a negative outcome to this. That's your opinion. Who am I to say that's wrong? But you're going to buy puts when they're expensive. So you better be right. You know what I'm saying? Whereas the put fly, I don't get as good risk return immediately. There's path dependency to a put fly, but it costs me a lot less fun. And when I say path dependency on a put fly, ask the support bot for that, but it basically is like where you structure.
All right, Apple was a fake out, no follow through. S&P starting to drive higher though. Hedge flows turning up.
We'll talk about that. I can write something up on that maybe, but we've also discussed that. Well, I watched NQQ's SMH Mag 7 Heroes lead indicator. I think I covered that MC. You just got to really kind of scroll through them. If one is big in material, depending on what's been going on, ultimately it's like, what is driving the deltas? What is the biggest value, the biggest delta hero indicator? Work on API, but in the event that doesn't include trace data, could you consider alerts on net OI changes? Yes, and we have Pulse, which is supposed to help with that as well. Pulse is currently in Discord. We want to add that into the other systems. Pulse, and I know, Vinny, you love it. Pulse requires me to manually flip the token, which is at the moment difficult. We're waiting the real engineers to build that out, so it's not so difficult. But zero DT Pulse is what's meant to sort of give you a heads up that some positions are changing. You see that, you can go check trace and then make an adjustment. We've added 2 new engineers. They're just getting their feet wet this week and next week. So we're arming up here to just do more and more. What's up, Luke? Was the market short put from the New York Open on NASDAQ and SPX? This is a call. This is a SPX call, put spread is what the big position is, Luke. A tab to only turn on 99 percentile strikes. I kind of like that idea. You should log that one. Mr. John Doe. So if core momentum is down and DSPX is up, it means the S&P equities hero has more sway on the price action of the S&P complex. I think so. And that's not necessarily a thought that has dawned on me up until we're sort of talking about it in real time. So, you can kind of put those things together. There's certainly more, I would argue there's more attention in the single stock complex as we've seen the last couple of weeks. I mean, there was a couple of days where we were covering around June with the correlation spasms, right? Where you could see how the market was just responding to the selling of big tech stocks. I mean, it was pretty wild to watch. Pulse in the last hour of the session. Yeah, I'll make sure that's on. How much premium do you put into when Trump speaks? Morgan Stanley is arguing that Trump's tweets are meaningless because what do they even mean anymore, right? It's just like, I don't say that to be politically biased, and so please don't get upset about that. But he would tweet, and now he tweets that he's gonna do this thing, and then that thing doesn't happen. Maybe he's using it to negotiate or political leverage. That's fine, but people kind of discount a little bit now, right? So. What Pulse is meant to do, and Vinny puts that on his X feed a lot. I don't know what your feed is. I don't remember your name on there, cousin Vinny. But the goal of Pulse is you can't watch everything, so you get the audible alert. There's a lot of flow happening, so you hear, okay, AMD Pulse, something's going on AMD. I'll check Hero. Oh, Hero's showing big call buying, great. I'll buy the stock. Flow alert, you can't see the direction, but what you know in flow alert is a lot of flow took place. It's kind of like the Pulse. But if Hero's going like this and you get a flow alert, well, you kind of know that was bullish activity. Market makers would use S&P futures is kind of like, that's broadly seen as the standard hedge for SPX index flow. Can we conclusively say that the market is being synthetically supported by zero DT? In this moment, I would say yes, and market's now at 7,400, so if you sold puts, you're feeling like pretty good about that. I didn't get a chance to, so that's all right, I hope you guys did. That level's gonna go away tomorrow, so if we revisited 70.45 and there's nothing there, why am I gonna think it's support? It's not. Now, the argument could be made that the whole reason we went to 70.45 is to take out that strike, that's to seek and destroy. I mean, to argue that one back and forth, it's a philosophical question, I guess. The tree fall in the woods kind of thing. When Trey says one thing and Hero says another, what's the tiebreaker? Well, the two can't say something different. Gamma is positive or negative. That's one statement. And then Hero is telling you which way the flows are coming into or out of that. Now, the price action of the S&P, given the two, it's like a matrix. Actually, it's kind of a good idea. I should make the matrix. If you have negative gamma and people are buying stock, well, the market should go up, right? And it should continue to go up is through that negative gamma area as long as that pressure is there. Whereas if you have a blue positive gamma position, what you're waiting for is that negative gamma to stop, and then we get mean revert, excuse me, that positive Hero to stop. And if the market is in a positive gamma environment, we should mean revert, if that makes sense. I don't look for mean reversion when we have negative gamma position. I do look for mean reversion if we have a positive gamma position. The map is trustworthy 24/7. Around 10 a.m., we tend to get an influx of zero DT positions, historically speaking. So that's just a systematic flow, Captain Condor kind of fellows. Do I ever act on a customer or firm split? First of all, this customer app is showing the customer position, not what is on the other side. So customers are buying and selling contracts against market makers. So if you want to see what the market maker position is purely from customer driven flow only, you would look at that. It pretty much looks like the market maker map. Now, what's the difference? Market makers can trade amongst themselves. They can trade against firms. They can trade against broker dealers as well. My back testing of positions shows me that 80% of the time, the market maker map is the most important map. There's some idiosyncratic situations in which the other maps mean a little bit more. That gets a little convoluted. I have this bot that I've been working on that parses that for us. This is something that Dr. Cosmos suggested that I look into. So you see a hidden trace channel on Discord where I'm working that stuff out. But the general guideline is market maker has the strongest signal. Does that mean, as a good analyst, you don't want to check all the positions? Well, you do, because maybe there's some giant firm position and like we just didn't see it or not paying attention. If there's a 50,000 lot firm position for today, well, shit, I want to know about that, right? So I it's a good habit to sort of scroll through. Put wall, hedge wall, call wall, et cetera. Technically, those levels should update for the SPX and spiders based on position. The stable positions, the non-zero DT positions, don't typically change that much on a day-to-day basis. The issue is the zero DT positions come in on 10 in the morning, roughly, they build up, and then they're gone by 4. So if you stay, the call wall is strike with the biggest call gamma, that is almost inevitably going to be some random zero DT position that came in on the day. But then that position goes away at night. So should you adjust your call wall based on that position that's here 1 second and gone? I would say no, right? Here's my call wall. This is my long-term resistance point. Here's my put wall, my long-term point. I have this field of play, and then inside of that, new little strikes come in and out, and I adjust for those on a daily basis. But the long-term range is this range, call wall versus put wall, and that's roughly how we look at it, right? Like long-term call wall has probably been around 7,500 for a couple of weeks, and that's that. When hero and price diverge, which one regulates to the other? Depends on the size, I would say. Like, so if you're gonna put on 4 or 5 billion of Hero in 10 minutes, I'm gonna think price is going to sync up with Hero, not the other way around. So what is the magnitude of the Hero reading? Ooh, Lord of TA, are you liking it? LordofTA.com, for those that don't know, a little goofy side project I put on. I like different things to idea generations. So if you go to Lord of TA, it's just a random technical analysis backtesting website I put together. Has nothing to do with Spot Gamma, so you can't complain to Spot Gamma support about it or ask our engineers questions. It's just kind of like a vibe coded thing that I was playing around. And on that note, it may never make its way to anything related to the Spot Gamma site. This is a Spot Gamma hat that I am wearing. A couple of our Spot Gamma OG members have gotten these, and if you were at the money show, I handed a few out. And it's a kind of a small run production, but we're gonna do some like maybe some fun giveaways and stuff for people. So that is that. It's the all-seeing eye. A real graphic designer is probably gonna laugh at that, but whatever. VRP, volatility risk premium. That's what that stands for. If we go down, what is my target? 7,000. That's where things level out. Now, that's what I think right now from a high level perspective. If you're talking about short-term target, long-term target, that's the long-term target. Today, 74.85. So for the reasons that we talked about today, as long as that position's there, I'm assuming that position is going to stay there. If that position goes away, then I don't think 73.85 is support anymore. So that's that, right? How do you analyze VIX 0 DTE versus VIX August 19? I mean, there is really no VIX 0 DTE. There's a 1 DTE kind of. VIX options stop trading the day before expiration. They expire at 9:30. I also don't think about strike risk really in the VIX. It's kind of a different complex, and that's maybe a conversation for another day. I have to think about that also a little bit. Do I think single stock futures will impact index and single stock relationships? That takes a lot of unpacking, I think. I think for the moment, you're having 24/7 stock trading. You don't know what the futures are necessarily going to get you. If the options complex is still going to be settled in the stock term, so in the short term, I don't really worry about it. You also have perpetuals that are starting to trade in some places, so there's a lot going on at the moment. But I think what I'm going to want to see is single stock futures become, let's say 10% plus of the notional value of single stocks, and then we'll have to start to pay attention a little bit more. What will be annoying and shitty, quite frankly, excuse my French, is if they start to launch single stock options, single stock futures options, then that's going to make what I do kind of a headache. So I'm hoping that doesn't happen. And I say headache, what essentially it means is they're going to extort me for a whole bunch of market data. Yeah, so the inverted simply means here, Joe, this is what the customer position has on. This is what their gamma is. Customers are long gamma to the downside. What does that mean? They own options. They own these puts. They own some calls. You own options, you have positive gamma. Well, who do they buy those positions from? We always are thinking about how does the dealer have to hedge? That's what we do here. So what's the dealer's side of this equation where you invert it, right? Okay, the dealer has the negative gamma on. That means that they have to sell stock when the market goes down, buy stock when the market goes up, right? Because that inverted is showing you what the opposite side is. So that's why we have the inversion on. The original trace was based on the customer inverted position. As we've updated this, as we've done more tests, we found that the market maker positioning is actually a little bit stronger statistically. And so if I want to know what the market makers have on, I don't want to invert that. I just want to see what they directly have on, because this should suggest what they have to hedge. I think I got through most of the questions.
WLDS.
I know there's a couple of earnings questions in there, but we are kind of pressing time here, and
Microsoft's still
to me are
moving.
not general
Microsoft.
earnings positions. And so, what I would generally say with earnings is, here's how I generally look at earnings. If you go to the scanners page, and if you look, we've talked about this a lot in the past, but if you're looking at something and you're just saying, what's my edge here? And I look at Bloom Energy, this is a very put heavy name. You can see that IV rank is 92, extremely elevated. You can see the risk reversal is 16%. What does that tell me? That tells me that most people likely want to get into puts, so let's make sure that's true. Yeah, look at that put skew, right? 81% in the IV is very high. So everybody's already positioned for big downside in this name. So from a high level perspective, I want to bet on mean reversion because everyone else is betting on downside, probably quite expensive. I think that would possibly mean that selling put spreads or put flies or some kind of bet that that put wing is going to flatten out, put skew flattening is the soft spot or the thing that I would want to target there. I don't want to be at long options of a name with 92% IV rank. Certainly don't want to buy puts when they are 81st skewed percentile and IV rank is so high as we just saw, right? So if there's a trade here, I don't know, but I would say, okay, can I sell the put wing or bet on the vol coming down, the put wing flattening? That's why I would put 1x2, put broken wing, put fly, that kind of a thing, betting that that put wing comes down, right? Because people have clearly maxed that out. And the higher the vol is like this, IV rank of 90 means I could probably go out a month or two. I don't have to bet on this week's option because the overall IV rank is so high. There's just a lot of vol in that name. So I'd be comfortable maybe going out a little bit longer in that type of scenario. So there's a little tidbit for that kind of an idea. Right, and that's the earnings kind of trade there. Lord of TA, like technical analysis. I made that, I vibe coded it. Again, I like idea generation from different places and people are saying, I look at this and look at that. So the Lord of TA thing just back tested 50 different technical analysis strategies and, or more and put it out there. So like, okay, cool. Show me an interesting moving average back test and maybe I can use that to buy call options. What do I care? Just want to win. It doesn't matter where it comes from. So that's that. I'm back in my normal seat on Thursday and Friday, so we'll be coming back around on that, and then the normal Q&A schedule for next week. Any questions, email info@spotgamma.com. Thanks so much for coming. I hope that Q&A session today was helpful. Sorry, it was a little bit different because I'm on vacation on my normal setup and everything like that. What else? Can't think of anything else off the top of my head. Yeah, info@spotgamma.com. I haven't been active in Discord lately just because I've been literally off the desk. We have a bunch of new stuff coming, new engineers coming, so all that is progressing well, I would say. All right, thank you, Arun. Thank you, Kevin, Peter, everybody. And we'll be talking to you soon. And then I'll come up on Wednesday. I'm still writing the notes every morning, obviously, so we'll have some ideas around maybe some FOMC trades. And if there's something interesting in the Amazon, Apple, Microsoft Meta earnings too, I'll make a mention of that. All right, that's it for me. We will see y'all soon.
Record.
All right, that was Brent over at Spot Gamma. I generally take a break from talking so much when he's on because he always brings forward some really good info. Anyway, hope everyone's having a good day. Hedge flows have turned up a little bit. I would assume that this is just short covering for now. Just a reminder, I'm going to be out Friday. I'm going to go drive down to visit with my mom for my birthday. I'll be out Friday. I'll be here Thursday. I'll be out on Friday. Friday is generally one of the slowest days of the week anyway. I'll be in the room, in and out, but you won't hear my voice. We won't have a live stream. And then I'll be back on Monday. She's getting older, so I want to make sure I'm around as much as I can. Hopefully she lives to be as old as my grandparents. They were over 100 both my grandfather and my grandmother from both sides, from my father's side and my mother's side, which is really unusual. Um, Father's side, a little bit older, a little bit older. I think 102. That was grandmother. Grandfather was like 99. And my mother's side, both were over 100. I have to ask her again. I think it was like 101, 102, something like that. My father's side lived on a farm in Georgia, north of Waycross, if you know where that is, Waycross, Georgia. They lived on a farm, so they had apples, scrambled eggs, and bacon every single day. They didn't smoke, worked hard, walked everywhere. My mother's side, they lived in Jacksonville. Anyway, different time to be living. It's a lot of stress for the younger generation. I'm your host, Cousin Betting, coming to you from theclosingprint.com. It is Monday, July 27th. It's 2:20 p.m. We got an hour and 40 minutes to go. So I purchased a wireless lavalier mic, lapel mic. It plugs right into my computer. Skipping the mixer setup. I'll get another mixer and I'll plug it into the mixer eventually, but the mixer I have is all analog. So I want to get a digital mixer. I think there's a lot less noise. The sliders tend to get dust in them, in the inputs. So hopefully the audio quality will pick up and get better. We had a really bad thunderstorm, lightning storm. That might be what happened to the mixer. It might have blown out the I forget what they call it. There's a part in here in the mixer, USB, that powers the low data feed. It boosts it a little bit. I forget exactly what it is. I'm not a technician when it comes to that. Anyway, those will be fixed shortly. The lavalier mic should get here today. Amazon 1-day delivery. That's pretty cool. They have a warehouse about 20 minutes from us, right near the airport. Airport's like another 5 minutes beyond that. Anyway, so just watching hedge flows, just sitting here. The purple area is going to be kind of sticky. The price action in this area is going to be sticky, the purple. If it gets into the red zone, we could speed up a bit. Volatility picks up. Sticky in the purple zone. If it dips a little bit and gets down into the red zone down here below, we could get a little bit more volatility. Prices could accelerate to the downside. The way it's trading right now, it feels like the markets are going to move lower.
Or 5 million barrels a day. Yeah. What's your estimate? I think the capacity is there for them to grow over time towards 5.4. I think we know the fields that can get them to. Need to make sure that they have a way to get it out, and that's why they built that second pipeline. Absolutely, but from 4 to 5, we'll have to see what happens in terms of onshore shale concessions and development. One of the important developments that we'll get over the next couple of months is from EOG, who's leading a lot of that exploration work in UAE. And from what we hear, the opportunity could be very promising. EOG, another one of these companies, they don't do a lot of media, but EOG and Marathon, I want you both to know that you're welcome on Power Lunch with Kelly and I anytime. Love it. We'll get Neil on. We'll just do like a whole thing, and we won't even have cameras on, or maybe we will. Neil Mehta of Goldman Sachs, always appreciate you coming on. Appreciate it, Brian. Appreciate it, Kelly. Thanks so much. All right, by the way, speaking of energy, sign up for our new weekly energy intelligence piece. Guess I have to call it a newsletter. It's called Power Insider. Go to CBC.
Magazine. It's not. It's like you know this much No, it's just. You're doing a lot of work. That's all I'm gonna say. It is. There's a lot in there.
There is, and I might have to trim it a little. We'll see. But hit that QR code. Check it out for yourself. Go to the website. Use your phone. Do whatever you want.
It's free anyway. Up next, Walmart is the new top pick at Mizuho, and not because of its lower discount prices. We'll talk to the analyst who sees the upside next.
JP Morgan on the move. Banks dipped a little bit during the day. Let's see what these look like. JP Morgan. Okay, JP Morgan. Buyers at the low of the day. 60-minute time frame is trending, so this looks good for JP Morgan. I did wind up selling some put credit spreads. Okay, I sold the 330, 325 puts. All right, so I sold the 325, 330. Lord of TA, this is Brent's test. I guess he's testing some things here. What's firing right now? Sectors, indices. I guess this will work soon. Overbought. Bullish, Apple. It's pretty cool. Sectors, mega, indices. Qs at the bottom, oversold.
Walmart shares are moving higher today, about 2% pop after Mizuho reiterated outperform and named the stock.
SpaceX turning back up.
The analyst says their delivery density is becoming Amazon-like, which could push the industry standard to free delivery within 1 hour. Walmart shares are outperforming Amazon by double digits over the past year. Wow, 5-year basis, they're up more than 100 points when you broaden that chart out. So can Walmart overtake Amazon officially as the delivery king. Here to discuss the author behind that note, David Bellinger, Mizuho Executive Director and Senior Equity Analyst. David, it's great to have you here.
Thanks so much.
So let's just talk about that 5-year stock outperformance, because I don't think many people realize we spend so much time talking about the Mag 7, but again, Walmart is such a behemoth. So you yet see that this is impactful. Their delivery business is really changing the game. Talk about that.
Yeah, absolutely. So the stock price performance is absolutely incredible. A lot of re-rating in the name. You've had some accretive business drivers like advertising that held back. But as we look at the core business, we did a lot of work around this ultra-fast delivery network that Walmart has now. And they can essentially deliver to 60% of the U.S. within about 30 minutes or less. So we stress tested that. We ran through every store address, scraped everything, ran through Claude.
Wow.
And there's actually some real viability to that. They're highly credible numbers. We think it actually downplays it a bit because about 80% of the Walmart store base is within a 20-minute drive of pretty much a large portion of households.
What do they currently have on offer? Is this part of their product suite, or this is what they're moving towards?
No, they have this available today, 60% within 30 minutes.
Okay.
We think it could actually be 80%, and there's some operational gap you have to close.
How do they get the product? So we know Amazon. We now see their fleets of trucks everywhere, all over. How did Walmart get you the product?
So they have, I think, a very, very underappreciated piece of this story is that Walmart has its own gig network of delivery drivers, the Spark network. We think there's more than 1.5 million drivers active on this platform. They could get you, such close proximity from the stores or from a dark store that gets you to that customer really quickly. So it's almost as if this 1099 gig worker model has really cracked the code on the final mile for Walmart.
I think that deal that they made years ago for diapers.com with Mark Lohr, they got Mark Lohr and his team in Hoboken, New Jersey, who know how to do this as good or better than anybody. I feel like that kind of launched that. Maybe go into that a little bit, but I also want to ask you about their data business, because you go back to that chart, and we all know Amazon is like an information company as well. Other things I read on Walmart suggest that maybe investors don't fully appreciate how much of a data company Walmart is now. They're building out a heck of an ad.
For sure. Two pieces to that. So that Jet.com deal was the biggest e-com deal at that point in time. That really propelled them into e-commerce to what they have today. It's about $100 billion revenue run rate in the U.S. And that
What they paid for that? I think he paid like it was Jet. I think Diapers was a part of Jet or whatever.
Yeah.
I think he paid $3 billion. It may go down as one of the best deals of all time.
Yeah, well, they got Mark and his expertise. He was there for a while, moved on, but they really took all those learnings and propelled them into the Walmart.com core business. And to your point on the data piece, I think that's a really untapped part of Walmart today. They're working really closely with a lot of these vendors and give them real-time data on why your product is moving, where it's moving, where you need more inventory, so that is an incredibly high margin business, maybe even 100% margin business, where they can materialize a lot of this and monetize a lot of this data to their vendor base.
And now, the classic questions to ask would be, is it all priced in? The valuation gets high. Kind of the same thing we always talk about Costco over the years. What are the black swans that could make this story not work so well?
Yeah, you always got to go back to the consumer, right? So there's been some consternation on the part of slowing sales growth, and estimates have been coming down into this quarter.
JP Morgan, recent breakout. Okay, recent breakout. So when you're thinking about the odds of a position working for you, one of the things I like to do is to watch for base breakouts. Whoops. And then gauge where I am versus that breakout. So a couple of weeks ago, we broke out on this big green candle, JP Morgan. A number of you mentioned it. That was what, Monday, 2 weeks ago? Monday, Tuesday, Wednesday, Thursday, Friday. That was Tuesday. Tuesday, we popped up. We hit that upper Bollinger Band, gapped above it, pulled back to the breakout zone. And now we're starting to trend out of the breakout. Starting to trend above the breakout zone. Okay, so I sold some 330, 335 put credits below the 21 day. So right in this area. Okay, so I sold right here, the 330, 335, 330 put credit. I'm long. I want this to continue to move higher. Just want to sell premium while VIX is, while volatility is up. Let's see. That's making money. JP Morgan. Let's see. Elf Beauty. Elf Beauty breaking out. I want to buy some AT&T. I want to get some leaps. Okay, I'm going to see what happens at the 200-day. This is AT&T. AT&T. Ma Bell. If you're young, if you're under 30, I don't know if you know what Ma Bell is, but Ma Bell, I mean, all the telephone companies used to be under Bell Telephone. Ma Bell. AT&T and others spin off. Something along those lines. Anyway, this is right at the 200-day moving average overhead. So I want to see how this responds. If it pulls back a little bit and then bounces, I'm gonna buy some leaps for next year. I'll probably buy a 50 delta or a 60 delta in the money. And I could do a poor man's covered call, or I could buy shares and sell covered calls. The poor man's covered call, you would sell, you'd sell one expiration and then buy one expiration in the money. So you buy like say a 22 or 23 and sell like a 27. Or you could just buy shares and do a buy right. The reason why I like AT&T right here is because of what happened with Verizon. Big breakout on Friday, following through today. Vodafone also gapping up. What's Nokia doing? Nokia's just died. Huh? BlackBerry, nothing there. Riot, Mara, Coinbase. All right. S&P still fading. Okay, we're still fading here, S&P. S&P is fading. Back to the trend line over there on the right.
One of the biggest beneficiaries of that boom has been Digital Realty Trust, ticker DLR, and it certainly has made some dollar signs for investors this year. Stock is up 25%. Digital Realty, one of the world's largest data center landlords, providing the infrastructure behind the AI boom, has more than 2,000 customers, including Microsoft, Google, Amazon, and more. Joining us in a Power Lunch exclusive, Digital Realty President CEO, maybe the best named man in the power space, Andy Power. Good to have you on. Thank you, Brian Kelly. All right, so I think that I'm sure you get this question from investors. Is the build-out going to continue, or is all the public pushback, political pushback, some big names pushing back, is that going to have a real impact? The answer to the question is yes and no. So we're certainly navigating community engagement in many markets around the world. But luckily, Digital Realty has been doing this for 2 decades, and we're about building trust and earning that trust right to operate within our communities. As you see that for 19 of those 20 years, people ignored it. People maybe didn't put the spotlight on it so much, but that raised the bar for our industry, which we're rising to the occasion. We're opening our doors to make sure people understand that we're serving mission-critical applications. Think of everything that's running your business, financial transactions with small and medium businesses, healthcare, manufacturing. Your last segment, amazing company Walmart, that's using technology and data. That's the infrastructure we're building. I'm looking at your stock chart, and you had this huge run-up kind of post-COVID, which is all the work from what was the post-COVID run all about? Because that was previously the old economy. Then there was a
couple of things go into play here. One, we are we play a dividend. We're very much linked to interest rates. So as interest rates went down, you had a resurgence in our stock there. The COVID era ushered in the likes of Teams and Zoom and work from home using more technology. Certainly our demand called move lockstep with that. I think this year we're off to a banner start. We just reported our earnings next Thursday. Our record signings in many categories. We've signed as much signings one half of a year, basically, as we did the whole last
It remind me again, what differentiates you from, we've talked to a lot of these Bitcoin miners that have turned into, data center companies. I mean, basically, are you now direct competitors?
I would say we're not the direct competitors, and that's on the customers and the markets where we operate, what we do. We actually serve 6,000 customers, and we're across three major sectors of demand. Digital transformation, cloud computing, which is a $500 billion rapidly growing market, which you saw from Google's results.
Exactly, it's making the cloud growth accelerate.
And now AI is a big piece of it. 50 plus metropolitan areas, 6 continents, and really focusing on growing customers.
Here's why I asked. I don't know if you saw this quote. I'm making the rounds. Mark Cuban's on all of podcasts. Did you see this? And he said, a lot of data centers will be turned into pickleball courts. Meaning, and then going back to the economics of the .com era, you have to think about this every day, right? And so again, I'm going to your stock performance and here's about it.
Workday still number one on the NASDAQ 100, turning back up. Workday. Shopify, been jockeying back and forth with Workday for the number one spot. Shopify dipped a little bit. ABCD pattern, perhaps. Looking for bidders to come in. Autodesk, ADSK. At the highs, new high of the day, Autodesk. Microsoft keeps trying to break out. Microsoft.
People trying to build data centers. Guys that were in other businesses are now data center developers. They're all coming to where the money is at. You know what I'm talking about. So I think I wonder if Mark Cuban is talking about this kind of people like they were building a bridge in Arizona, but now they're going to build you a data center, and then in 5 years we're looking at backdrop where demand's well up against the supply. It's multifaceted. Markets, global in terms of nature, but we're not chasing demand from each and every day of 50 states of the United States. We're focused on places where our customers workloads need to live. And when our customers put a workload with us in Northern Virginia, it likely has to stay there. And it can't be North Dakota, another state.
All right, Microsoft trying to get back up to the high of the day. It's got to get above the 50-day. You can see over there on the right. It's got some work to do. MACD is bullish, though.
Because all the wiring is coming in. So with that in mind, this is maybe where the problems have been, Andy, which is the electricians getting wires built, getting a concrete company to lay the foundation. What is the supply chain looking like now? If I wanted to, Kelly and I decide we are now in the data center business. We're one of those people. We're going to open up a data center. What's my lead time? Supply chain through every element of the data center supply chain, utility, construction, elements, all the way to hardware walls. Is this type ever been? How many years though? Idea to the first, the lights go on. You have to be locking in for multiple years. Production slash generators, switch gear, and everything. Can we go back to your first question about the people? These are many-year construction projects for people building out on campuses, like permanent technical jobs, engineers, electricians. Every job in one of our data centers, 4.5 jobs outside the data center.
That's the pitch against a lot of communities who are pushing back on it, but you see no reason for that. And the water usage, that's just the info. Well, what else? Let's go down the list of worry. Water, politics, I don't know what else.
Numerous places where we show water's one of my favorite So we operate 300 plus data centers. That's much more than 18, 1/8 California golf courses. It's nearly 16 million. What we're trying to do here on CBC is just get people on to say exactly what's going on, because there's a lot of this. Some of that which is very, very high level. Sandy Howard, Digital Realty Trust CEO. Appreciate your time. Thank you.
Frank Collins now for the CNBC News Update. Frank?
Hey, good afternoon, Kevin. Brian Holberg pleaded guilty to murdering 4 University of Idaho students, says he now wants a withdrawals plea. Reopened cases. Holberg sent a statement to the New York Times, in which he claims he is innocent and will fight the conviction. He was sentenced last year to 4 consecutive life sentences for those murders. The IPO for Jersey Mike's has reportedly attracted investor demand for more than 10 times the available shares. That's according to Plunge. The Blackstone-backed sandwich chain is expected to rise on Wednesday. It's looking to raise more than $1 billion in the offer. Jersey Mike's has more than 3,300 stores across the U.S. and Canada. And the Gordie Howe Bridge officially opened up this morning. Critical route for trade and tourism between the U.S. and Canada. It spans the Detroit River. Canadian officials held a ribbon cutting last week, but representatives from the federal government and from Michigan were uninvited after President Trump suddenly announced 50% tariffs on Canadian goods entering the U.S. Brian, back over to you.
Competing bridge in Detroit to Canada. Frank Collins, thank you.
Thank you.
All right, on deck. Get your motors running because there were 3 big auto industry stock upgrades today, including one big EV maker not named Tesla. The stock and the analysts behind the call. Next.
DFNS. DFNS.
DFNS. WLTS halted down.
DFNS.
HIMS.
DFNS.
HIMS.
VIYN. DFNS. MIE.
DFNS.
All right, a lot of action in the automobile space today. Rivian upgraded Piper Sandler. The analyst likes Rivian's quote, de-risked balance sheet and the launch of the new, smaller R2. The same call, the analyst double downgrading Jeep parent company Stellantis, saying things may get worse before they get better. Get the analyst behind that call, Alex Potter, joining us now. Alex, good to have you on. Rivian, obviously a favorite of car owners. It's been a favorite of some investors. Stock's been kind of meh. You like it a little more now? How come?
HIMS.
Yeah, a little more now. I think there's a couple things you touched on. De-risked balance sheet. They just raised some money. That was something that we had been somewhat concerned about. Don't always necessarily want to own
stocks ahead of diluted capital raises like that. That's no longer a concern. I think the second big thing was demand and the R2 launch. R2 is their big new SUV that's coming out. They mentioned in the process of raising that capital, pretty good demand backdrop. They increased their guidance for deliveries this year. No major red flags to highlight with regard to the R2 launch. So those are a couple big risks that I think are no longer on the table. So we upgraded the stock.
Yeah, the R2 retail 45,000 is sort of the early MSRP. Obviously goes up from there. I get that. And that's a lot better than 80 or 90 or 100 for the R1. How much is that lower price point going to matter for broader consumer adoption? Because the math is just the math that a lot more Americans can afford a $50,000 car than a $100,000 car.
HIMS.
Yeah, exactly. I think that's the big deal. It's going to matter a lot for consumers. Something that this company mentions a lot, which I agree with, is in the U.S., at least, we don't have a lot of choice when it comes to electric drivetrains.
Microsoft. All right, HIMS. I just heard a HIMS alert. HIMS going. HIMS alert.
That are priced in that range, but they generally have gasoline engines. Not a lot. It's pretty slim pickings in electric drivetrains. And Rivian coming out with a product in that price range, I think is going to be well received. I think it's also good in the context that gasoline is more expensive now than it has been, as viewers are likely aware. And we've got some incremental positives, I guess.
Microsoft trying to go. Hims and hers just jumped. Hims and hers.
LTS may rest in 10 seconds.
Ooh, are they talking Ball Corp? I was looking at Ball Corp on the watch list. Ball Corp breaking out. They're talking about it on Schwab right now. Ball Corp. I noticed this last night. Breaking to the upside on Friday, following through today. Ball Corp probably keeps going. MACD turning up. Ball Corp. They make aluminum cans and aluminum for defense and a lot of different things. Aerospace. There goes S&P. S&P popping. Okay, S&P off the low of the day. Yeah, right at nice job. Nice chart there. Dollar. Thank you. Snowflake, Microsoft, Apple. Apple's starting to move here. Apple. Apple looks good. Apple going, shorts covering. Apple is going. We got shorts covering here. Apple coming off the low of the day. Okay, the purple line is the pre-market high. Okay. Bollinger Band starting to turn in, so we could consolidate up here at the highs. A new all-time high on Apple.
But nevertheless, it's got some momentum behind it here ahead of this earnings snap, which is going to be a critical test for Josh Diamaro, the new CEO.
You know, it's interesting that I saw in Orlando, they had soft
are people tired of Disney? You know, sort of what is the problem that they lack meaningful near-term domestic growth that they need there when it comes to something like
Apple coming off the low. JP Morgan 60 minute. JP Morgan, the 60 minute, you can see the bounce here underway. Came back and tested the 10 EMA. Didn't get to the 20 EMA, turning back up.
Thank you, Brent, for being with me here on the watch list every single day at 2 p.m. In fact, to see you at 9 a.m. for opening bell, 2 p.m. for the watch list. And I'm so glad that we're together every day here on Schwab Network. I'm Nicole Semolini. The Dow's up 188. The S&P's down 2 points. You got to keep it here because you don't know what happens between now and the closing bell. Every minute counts on Wall Street.
JP Morgan.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award.
JP Morgan. Apple. Okay, Apple, we got a lot of volume here on the buy side.
And enhanced security features to keep your money safe. Also, because your investor checking account is linked to Schwab One Mortgage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your mortgage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. By the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Now the biggest headlines, live analysis, breaking news, trade ideas, minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
On Insights, say pitch for traders and trusted financial journalists. Streaming live at home. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Okay, Apple, got some buyers here. Some sellers just overhead between here and VWAP. 40,000 lots, 16,000 lots, 29,000 lots, 120,000, 160,000, 16,000. The bids are winning. We're starting to move a bit higher. And we just dipped a little bit. Let's see where we go from here. S&P 500.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support.
SPY, S&P trying to rise. There goes Apple. Apple. Okay, we got to take out that 335. Apple, 335. 336. 335, 90. 336. 335.90. 335.90. Just shy of 336. 335.90 on Apple. some fairly big offers, 56,000 shares. Okay, Intel turning up, Intel going. Intel popping. Intel going now. Our chips are getting bought. Shorts covering. Shorts covering.
Happy Monday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Keaton coming to you live from our Chicago headquarters. Let's take a look at what's coming up on today's show. We'll discuss what Alphabet earnings indicated about the state of the AI trade and where market opportunities lie both within and beyond AI. Then we'll discuss the two shifts taking place in the bond
Intel ripping here.
strategy for fixed income. Then at the close, we're going to get to
Intel.
on the AI trade with earnings coming out from Design Systems and Applied Digital. As far as what I'm watching today, though, the chip equipment group underperformed
Intel.
today.
100,000 shares. Intel, 100,000 shares at 91.40. Intel, 100,000 shares. 100,000 shares.
With Uber, that's according to a Financial Times report. And Jefferies turning more bullish on the automaker space, upgrading Ford and General Motors to buy. The firm says U.S. market conditions are healthy while noting idiosyncratic catalysts for each of the vehicle manufacturers. Lots to get to today, but before we get to all of that and more, let's check in with the market, see how things are shaping up as we head into the end of this trading day here. Mixed picture, the S&P trying to stay in positive territory, but it has been seesawing throughout the session. We are fractionally in the green right now at 74.
Intel, 100,000 shares at the bid. This thing is going now. Turning back up.
Earlier today, we're at 28,026 right now. On the Dow, more than 4/10, we're at 52,175, up more than 200 points so far. And the Russell 2K is up 0.5% at 2945.10. That's 0.5% higher.
All right, nice. Nice with Intel.
65, but the dollar holding firm above 101. As we look at gold, slightly higher, we're at 4,079 a troy ounce. Crude oil holding well below $90 a barrel.
Intel looks good. All right. Nice.
Bitcoin still range bound. We're at 64,875. That is 1% higher, but still in that 60 to 65,000 range we've been watching for the last several weeks. Do you want to welcome Jenny Horn into the conversation, though, co-host of Next to Gen Investing, here to talk about some of these top movers today. And Jenny, I want to kick things off with this ASML move. I hinted at this China story that a Chinese state-backed company out of Shanghai has reportedly developed and is ready to scale and produce its own DUV technology here, which could disrupt the industry and ASML's dominant lead in the space.
Right, because they're really only the pure play into this very specific technology as it stands right now. And so there's a reason that they're seeing the most notable sell-off, of course. But China did throw a couple of roadblocks really at, I mean, not just ASML, but also a name like SanDisk, as well as a host of others. After we did see that, I mean, some substantial pressure. Western Digital has fallen. SanDisk dropped as much as 13%. Was at one point one of the worst performers in the S&P 500 today. Well, Intel Supermicro also did see some pretty substantial losses today. After the first pothole that we saw was that the right now debut CXFT surged, I mean, 466%, and it public debut with a market cap that now stands at an astounding $484 billion. But it seems like the really straw that broke the camel's back, to say, was the news of a Chinese company producing this immersion deep ultraviolet lithography machines, which are a key type of machinery that is used in making chips. But this is, of course, they're some of the first to really then fight to eliminate the cornerstone that right now ASML has in that very specific light technology. And so Morgan Stanley did acknowledge that China is well on track to become one of these really primary beneficiaries of really the innovation for AI by 2030, and that the country will be further spearheading.
All right, Intel's still going. 100,000 there is again. 1,300, 130,000.
Continue to see China really focus on capital spending on memory chips, as well as software layers for GPUs and chip-making machines. But what this would do is, again, eliminate that competitive moat that has been so much of the reason we've seen ASML really have a phenomenal year. So this name, of course, that makes those specific types of machines.
Intel Bid is still coming in here, Ben, Intel.
But overall, this seems like this is right now a pretty major roadblock for a lot of these companies that have kind of had unprecedented gains this year on really a lack of competition. And not to say that they don't all, necessarily compete with one another, but not really in the same way it seems like that China companies are starting to emerge and really give quite literally these companies a run for their money.
Yeah, I mean, we saw ASML move 6% lower on this session. Also, KLA and Lam have moved lower, and we've got earnings.
Intel. Okay, cool.
So interesting timing on this report as well. I want to shift to Alphabet here, though. Obviously, we saw some heavy punishment for Alphabet last week on the heels of its earnings, or I should say on the heels of its CapEx spend, really was what we saw the downward move likely because of. But today, Philips Securities giving a nice upgrade here up to buy from accumulate. So buy to strong buy, I guess, would be the equivalent.
Yes, and I think they're further signaling that the average rating amongst the 60 plus analysts that cover the theme is still buy. So you take consensus, the average is buy. The right now consensus price target is just shy of $430 a share. So they would put the Philips Securities with a slight price target reduction, maybe slightly below the average, but I mean still a very bullish note. You mentioned with an upgrade to buy from accumulate, price target cut to 425 from 450. And they did note this robust revenue growth across its core business segments, saying they remain very constructive on this long-term outlook, which right now is vertically integrating AI ecosystems that they at least believe should continue to support this robust growth across
Okay.
class businesses. Saying that also they continue to see further runway from here, even with this recent pullback, with now shares, off of highs by about 20%. Additionally, we got some interesting developments from, of course, another segment of their business, just to further remind how really massive this company is. Waymo now weighing options to split from its Uber partnership, with right now the relationship likely between both parties starting to sour amid this intense lobbying battle over the self-driving.
Wow, Intel is going. Intel's going.
Ending its current deal with Uber, which operates services in Austin as well as Atlanta. Waymo has also told Uber that it already intends to enter these markets independently by at least January of 2028, when the contract allows. In these two cities, hundreds of Waymo robotaxis will remain available on the Uber platform through at least May of 2028, and that, of course, is the duration of their existing contract. But up until this point, Waymo has made its robotaxis available in those cities exclusively on the Uber app. And so now looking at cut out that middleman, of course, probably establish its own app. I'm not sure this is necessarily shocking for anyone that's followed a company like Waymo that tends to do it itself eventually, but seemingly not a good thing if you're Uber. But
More. Okay, here we go. More.
A full self-driving push and more autonomy in across its fleet. But it does seem like some of these timelines are quite a ways away. Again, we're not talking that this relationship is ending until 2028 at the very earliest.
It is very interesting how I was reading a lot of this is tied to the lobbying that both companies are doing. Obviously, Waymo wants these driverless rides, full autonomy, which it is already operating in 9 different cities. We've, of course, got Tesla trying to mount the same thing here. But Uber lobby is pushing for legislation that's requiring that human drivers actually be present for the high percentage of robotaxi pilot programs and also for rideshare programs in major metro areas. So, I mean, a stark divergence there. Also considering Uber has been investing with Wave and Reride, and they have a huge partnership with Rivian. I think a $1.25 billion investment in Rivian to deploy 10,000 of their robotaxis, interestingly enough, starting in 2028.
You talk about a circular business, and it's sort of like a competitive, really like competitive mode around a lot of these things. They all work with one another. I mean, it's the same to be said about, like, right now Amazon's fleet with a partnership with Rivian, a major multi-year partnership with Rivian, as well as like Tesla's also trying to obviously enter the space, but in a different way where they're not utilizing the same type of technology. FSD is a bit different, which is why we haven't seen the same, of course, really scale out of that business, because it takes a little bit more time. I will be very curious to know, like, the increased regulation that will, I mean, I'm sure support a lot of the growth in this space, but that could be years away. So I think as we see this more and more of a presence, I mean, you mentioned like the human component of some of these pilot programs. I think that how could you not have, I mean, like the safety of at least a human, operating some of these vehicles for the time being. That I like prefer to have a human, even if we have full self-driving available. I think I still would like someone in the driver's seat, just as long as I'm the
All right, Intel going here. Nice.
but it was the first person who said it very clearly and plainly to me. Speak to, I mean, what now that perspective is we've seen how this lack of adoption from FSD specifically, which is part of the reason we've seen Tesla go back so notably, but I think it's a good point because now Waymo's scaling. Tesla's not at that point yet. Not to say don't necessarily doubt Elon Musk, because I've always said that there's such innovation when it comes to him leading a company, but it's a good point that we've seen now, I mean, realized in real time. Yeah, betting against him historically hasn't been a good bet. It is not. Yeah, historically. It doesn't mean it's true. Let's stay with cars here, though, and switch to Ford and GM, who are both moving away from their EV strategies, but they got a nice note from Jefferies today. They did, and actually, more notably, Ford has made a really substantial pullback just in the last, several months, and it's kind of been like a quiet move. So we've seen correct pretty substantially to the downside. So maybe this analyst enough to sort of propel things a bit higher again. Jefferies is an upgrade on Ford, though, to buy
Still going. Holy shit, we got a whole bunch of going through there. Intel, big moves here.
They often mention these U.S. market conditions are relatively healthy, and the company could also be raising its outlook with its second quarter reports. They did also note that Ford is now demonstrating improved capital allocation and addressing.
Holy smokes. Intel is going here. Look at the volume. Wow. Nice.
This recent second quarter earnings event last week was confident that 2027 will further strengthen their position with the U.S. profitability oligopoly. And so they went on to say that right now they're continuing to see overall consensus above even their own estimates by roughly 6% through 2026 through 2028. And they even highlighted 2027 specifically with earnings approaching, and their belief,
Okay, Intel. Tesla pulse alerts. Let's see, Intel, any Intels here? SMH pulse. Okay.
Apple Pulse, long dated.
Apple pulse, 100%. Here goes Apple. Apple, pulse alerts on Apple. Starting to turn. Apple's starting to turn.
SMH Pulse,
Tesla pulse alerts. Puts though. Puts leading.
SMH Pulse, long dated. Shenanigans. Zero DTE, call sign. Sat.
All right, looking good. Okay.
test may resume in less than a minute.
AMD pulse. Long dated. AMD pulse. Long dated. AMD pulse. Long dated.
WLT test may res in 10 seconds.
Long dated. NVIDIA pulse. Long dated.
WLT test falls down.
NVIDIA pulse. Long dated. Shenanigans. AMD pulse. Long dated. Deep calls.
All right, looking for, okay, we're starting to taper off now, take profits in Intel. Okay. I don't see any big orders again. Need to see some big orders on Apple, Intel rather, Apple. Let's see what Apple's doing. Apple.
0 DTE. Call side. Size.
Apple, we got 20,000 lot, 47,000 lots at the bid. S&P's trying to push a bit higher, watching Intel.
BIOT.
0 DTE puts. Size.
AIDC.
Bitcoin Ponzi pulse. Long dated.
AIDC.
All right, New York Fan components. Let's see what those look like right now. Going into the close. Still look a little stalled. Need a little bit more. Need a little bit more from these. Apple kind of sitting here now. Google turning back up. Google. Okay, Google. Let's see what Google does. Let's see level 2 on Google. Google. Boston Scientific.
FIE may resume in less than a minute. WLTS may resume in less than a minute.
Q's pulse, long dated, deep calls.
FIE may rise in 10 seconds. WLTS may rise in 10 seconds. DFNS. DJT.
SPX pulse, long dated.
DFNS halted to the upside.
All right, watching Google for a move here. Okay, we got some 20,000 lots coming through right now at the bid. At the bid, 20,000 lots.
0 DTE, call side. Size. NBIS, long dated. NBIS, long dated.
ARM.
FIE.
SMH Pulse. NBIS Pulse. NBIS Pulse. Put side, NBIS. Shopify at the top of the list. Google looks like it wants to keep going. Google, where is the opening range high? There it is. Opening range high is overhead, hanging out above the 200-day. Got a couple of sellers at 327.49, 327.49 on Google, 327.49. Why is it doing that? Why is it doing that? $327.49.
FIE.
Futures continue to rise. Futures.
Micron pulse, deep puts. Micron pulse, deep puts.
WLTS may resume in less than a minute. DFNS may resume in less than a minute.
Okay, looks like Google wants to go. Google wants to go.
WLTS may rest in 10 seconds.
Mm-hmm.
S may rest in 10 seconds.
SPS pulse, long dated.
TS melted down. DFNS.
All right, Google's at the high. All right, looks okay.
Shenanigans.
CLS.
Mm-hmm. All right, Tesla turning back up. Broadcom. Okay, all the chips turn back up. Rocket Labs at the highs here. Rocket Labs, RKLB. Rocket Labs going vertical.
SMH pulse.
Rocket Labs is bid. RKLB.
Amazon pulse, long dated. Q's pulse, long dated. Zero DTE, call sign.
ARM.
Sign.
Okay. Rocket Labs. Rocket Labs, I keep seeing these. Rocket Labs.
Micron pulse, long dated, shenanigans. Sandisk pulse.
Okay, Rocket Labs on the move. Daily is still muted, but the intraday is a nice little bounce there.
Micron pulse, long dated, shenanigans. SPX pulse, long dated.
LTS may rest in 10 seconds.
All right, S&P continues. Nice little reversal. Nice reversal. Back above 7,400. Do we have enough time? Nah, 28 minutes. Can't bring it back. Can't get it back above the 200, the 50 day, but a hammer would be good.
Triple semi pulse.
LTS falls into the upside.
WLDS.
S&P still climbing. Rocket Lab still pushing. What's Intel doing? Intel. SpaceX is on the move. SpaceX popping. SpaceX on the move. Rocket Lab's looking good. SpaceX, nice move. Lots of volume here. SpaceX. Ooh. Looks good. SpaceX. Still got a lot of basing to do.
Long dated. Deep calls.
DFNS.
WLDS may resume in less than a minute. DFNS.
Nvidia pulse. Long dated.
All right, S&P is starting to see some profit taking. S&P.
DFNS.
SPX pulse. Long dated.
Rocket Labs just off the high of the day. Microsoft pulling back in. Netflix bouncing. Google at the highs. Google near the highs of the evening session. Opening range high is still overhead. Chewy.
Sandisk Pulse. Chanel.
Let's take a look.
LTS may res in 10 seconds.
SP Exports. Long dated. SP Exports. Long dated.
Chewy. Chewy. CHWY. Chewy. Yeah, it looks like it's trying to break out. It's breaking a downtrend. A break above today's high would be significant. Gross margins expanded. %30.
Zero DTE puts. Size. Zero DTE. Call sign. Size.
Yeah, Rob, that looks pretty good. You've got free cash flow at 562 million. Cash engine supports debt-free balance sheet.
Nvidia Pulse. Long dated. Nvidia Pulse. Long dated. Nvidia Pulse. Long dated.
DFS may res in 10 seconds.
Micro pulse, long dated. Micron pulse, long dated.
WLTS may resume in less than a minute.
Yeah, it's a good entry zone. I think you got to go in there. It's pulling back below VWAP, Bollinger Bands. Bollinger Bands are tight.
LTS may res in 10 seconds.
Q's pulse.
And inverted head and shoulders on the daily. You got a left shoulder, head, right shoulder. You're above the 50-day. Looks good. Looks really good.
Zero DTE puts.
WLTS vaulted to the upside.
All right, Frano, take care. Take care, Frano. Yeah, I might join you. Into
DTE puts.
S&P bouncing.
Zero DTE put strip.
Apple turning back up. Apple's bid again here, folks. Watch Apple. Okay, Apple turning up. Turning back up, Apple. At a new all-time high.
This may resume in less than a minute.
Q's pulse, long dated.
Okay, Apple turning back up. Microsoft fading now. Google fading from the high. Looking for a follow through tomorrow. Stay above the 200-day. What's JP Morgan doing? JP Morgan, the banks. Okay, looking at that.
This may res in 10 seconds.
JP Morgan pulling back the VWAP.
Nvidia Pulse, long dated, deep puts, 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 Nvidia Pulse, long dated, deep puts.
LDS may res in 10 seconds. GG halted down. QBTS.
Okay. All right, so profit taking here and there. Nvidia coming off the low. Apple continues to push off the low. Apple turning back up the VWAP. Apple, new all-time high. Apple looks good.
AMD Pulse, long dated, shenanigans.
QBTS.
SpaceX, long dated, deep calls. Zero DTE, call strip. Zero DTE, call side. Apple Pulse, long dated. Meta Pulse, long dated, deep calls.
Okay, Intel, Apple looking good.
Micron Pulse,
Apple running here.
Micron Pulse, shenanigans.
Apple, Meta, calls leading.
Zero DTE, call strip.
Rocket Lab's still pushing here.
Soft Pulse.
QBTS. DFNS may res in 10 seconds.
Zero DTE, call strip.
EGG may resume in less than a minute.
Tesla Pulse, long dated, deep calls.
INFY. QBTS. LDS may resume in less than a
Zero
minute.
DTE put strip. Soft pulse. Long dated.
HEG may rise in 10 seconds.
Zero DTE call strip.
Okay, let's see. AT&T. I do want to do something with AT&T.
INFY.
When are their earnings? Their earnings that are away, right?
May rise in 10 seconds.
AT&T. Let's see. Watch list. Watch list. Did I put it on here? Yeah, I did. Okay. October 21st.
Zero DTE put strip.
October for AT&T.
Zero DTE call strip. IWM pulse. Long dated. Nvidia pulse. Long dated. Deep calls.
LABD.
AT&T. I bought some October 24 calls for $1.45.
Nvidia pulse. Long dated. Zero DTE put strip.
QBTS. LABD.
Okay, that's the closing bell. All right, I bought some AT&T right there. Don't usually buy this late in the day, but the 24 call.
FSA.
Okay. That's a wrap, folks. Have a hard stop. Have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Hopefully, we'll have my lavalier wireless mics for tomorrow. I can dispense with the mixer and get rid of that and do something a little bit more digital. Anyway, have a great evening, everyone. It is Monday, July the 27th. Nice little bounce in the day. Let's see. Do we stay above 7,400? Yes, we're close above 7,400. So that's a plus. It's not the best, but that's a plus. Have a great evening. Take care. We'll see you tomorrow. Ciao.